All right. Just goes straight to live, doesn't it? So let's take a look at what is going on here. Make sure. All right, so this is really important to understand. Like, so coming into this from yesterday was a blow off. We had a real nice curl here right at the right time. That means that this is like a betting game that was going on between the Bulls and the Bears, and the Bears folded. The Bulls won. There's no one at the table, and that's the big issue right now. Is that you need somebody on this side of the table. You don't have somebody on this side of the table, you don't get a play. There's no one to play against. So what we needed today was to see the market dip after a blow off and pick up a counterparty, somebody to bet against. And since the Bears, basically what happened to the Bears was they had some bad data a while back. Let's see, about here or so. Yeah, it was right about there. And it came in the form of what I think was bad data that sort of got things rolling. It was totally wrong. It triggered a bunch of algos. They got trapped, and so they were in a loser. And then what happened was throughout that story, basically those bears got turned upside down, right? So I mean, you have to track this sort of how they're thinking. They get into a negative position. It comes up. They tried to get into another one and dollar cost average out, and it moved up. They got into another one, and then it moved up. They were in a terrible position, and then we watched as the Bears sort of stopped playing, maybe right around this one, and the Bulls realized all they could do now was to shove. There's just nothing left to do. The Bears had stopped trying to dollar cost average. They left it up to chance or gambling, and then it pushed up, and that's what yesterday was all about. I mean, it was this nice curl into the close that maybe I could rescale this chart a little bit. Curling tension away from zero is difficult. It's an acceleration in probabilities, and it's difficult to do. And it can really only happen, especially later in the day, if you have a change in not just like a little area. This is looking at the full broad spectrum of the entire exchange and modeling out. The whole market's got to move. So if you're going to blow somebody out, you can't just take out one instant. You got to take out a big group, enough that they all capitulate and it shoots up. And that's what accelerating this into the close meant to me. They were blowing off that. They all hit their pain tolerance. So we take them out. What do we do next? Well, we need to find some more players. So this looks really aggressive. I know it does, just because when you look at your chart. I mean, if you pull up a different chart and you get a little bit better, this is what I've been sort of using. You get a little bit better idea about how big that move actually is. It gives you a better sense of what's happening. It's just that right now what you're seeing is something very scary. It's scary looking. And so that makes it hard to see what's happening. So this looks very scary. The objective for today, don't think about this in terms of trading. Think about it, you're sitting around a table and you're trying to play cards. You just took all the money. You just took all the money from the guy across. He left. There's no one to play against. So I think what this big move down about is trying to get somebody to sit down at the table. And if you remember yesterday in the notes that I left on Twitter was, we need to find some bears. That's what they just called the pot. So we got to find some bears. So look what happened. Right here, I think were the bears that mattered, right there. Now there were some this morning, right? About here. See how this moved up? This bar and that one didn't line up. It was right here. This is the first position here. The bears. There's a smaller position. They were able to hit. I mean, look at their impact here. So we did get some bears this morning off of this idea, but this is how it works. You need to find the bulls first. And then those bulls need to make it clear what they're doing. And then we see the thing they're doing happen. The reason this is important because this is all inference. It's all inference. We're not sitting in a room able to ask and get evidence back and sheer data points. If we were, everybody would win. It would make it easy. The thing that makes analysis effective is if it's exclusive, or essentially there's inequity in it. It's not everyone can do it because it asks something of you that's hard. So we have some bears come in here. We have some bulls show up right here. So this was the moment where we get to learn everything. You see that zero test? So we get a big daily zero test coming down. The bulls are asked this question: do you want to hang on to daily probabilities or not? And when it got to daily, it was like, what do you guys care about? And we got this right at the same time that crossed over, and they did nothing. So now we know the bulls are sitting here thinking, no, we're not looking to hold on to probabilities. We already wiped that out. What we're looking to do is see if we can regenerate the thing we had going. If we can re-get that going, we need to trap in some bears and then get that going. So right here is where I start to see, this spot here is where I really start it as like the first point in the things that I was looking to see. Then we get this here where the bears get, and this is going to be my second point. It's going to, now in the notes after this is going to be point one, but just for the sake of this particular narrative, this is what's happening. We have the bears coming in completely like missing. You could see, right? There's their volume, decay moved positive. There's our signal, there's the volume, and nothing. Okay, so this moves up. Now the question is, can we get the ball rolling? We found some bears, we got them upside down. Can we get the ball rolling? How do you do that? You gotta hold them in. So I think what the market really would like to do is get a bullish position. And this is where, this is our first point. This is our second point. I'm going to say this is the third point where we learned that the bears failed and they're upside down. And now our fourth point here, the thing that's going to matter is are we going to get the bulls to come in and make this happen? And this is important, I think, because in terms of narrative and like the emotional state of all the institutions, this is going to be a big deal the next hour or so here, because this is going to tell us the sentiment or the intentions of the bigger institutions. Bulls essentially gave up or did nothing. They stepped aside and let these probabilities move negative. Now on the 30-minute cross right there, you see that correlated really well to the low. The 30-minute went under and we saw a little bit of a response. This response leaned us up into data point number 2. So you could see that as a little bit of bullishness hinting at that. I do. Not a lot though, because we didn't, like, you remember this daily one right here? We had this bullish liquidity. I like to see liquidity sort of line up with those. It doesn't always do that, but I like to see that. It just looks a lot more structured to me and controlled. So now what we're on is data point number 4. Can the bulls put the money where their mouth is? If they can, we're going to head right back up, and the first place to get to is going to be here. That's what we're looking at. If the bulls can't, if the bulls come in and they say, bah, I don't know, I'm tired, I'm just so tired. Maybe that's what they say, I don't know. What that's going to look like to me is that the market produces or generates that liquidity, hands it to them, and they don't do anything with it. And I think what that's going to be is that's the moment when the bears are going to go, let's go. And they're going to treat this more like an actual move versus just like a response to a one-sided market. So that's what I'm looking at coming up here. So we're about to get that decay test. It's coming up right here. We're going to see decay cross over 0. That's the signal. And then you need the confirming volume. So we want to see sellers. So you want to see this crossover. Announce to everyone, hey, everybody sell. Negative means sell, right? And the sellers go, yes, and they execute the volume. And hopefully we get some volume maybe right here. And this crosses over. And then the bulls pick that up like that. This would look just very good to me. And we see decay kind of move back up. We see velocity start to move up, and we get a lean. And this would work really well, because then we have trapped in a group. We have the bulls confirming that that's what they intend to do. And then we can work our way up gently trying to get these guys in trouble. And the objective, of course, would be these guys. And the whole way that I'm structuring this is based around narrative. The idea is we've been watching the story for the past week and a half. We've been watching this develop. It's not just today. This isn't about today. This is about the whole situation. This is about things like how that the pandemic rally reversed. We popped out the high and everybody had all these ideas. So a lot of people were hair triggered short and they were just, oh, we're going to break back down. And then it moved up. And now we're moving back down after the move up. And we've got all these really big ideas floating around in the periphery. These are things people are, oh, if Joe Biden wins, if Trump wins, are we going to have police in our neighborhood next year or not? These are big questions. These are big, scary questions. It really is important that you understand that this is about a big picture, but the big picture is only validated as it's filtered through institutions. Nothing in this world matters with respect to trading outside of institutions. There's just nothing. I think it's silly to think that the people who have complete control over all the money couldn't control the markets. They get to validate and decide what's true and what's not. So that's a big deal. So we have a lot of really big ideas, and that brings in the volatility or possible movements and stuff like that. So that's kind of what I'm seeing right here. So this is an issue right here. Do you see what just happened? You see how decay pops up here. Why is this an issue to me? Well, this position's supposed to be a loser. Right? It's supposed to be a loser. So we have our bulls right here saying, all right, we're looking to see if we can trap in some legitimate bears and make this happen. We're moving down, we get them, it's leaning up, and now that decay has been allowed to push back away, now it has to do all this work to get down there, which means that price could now move down much lower before. So that's why it's a problem. If we had done it a little earlier, it could have worked out really well, but we're going to take a little time and sit here and ask ourselves if this is going to work or not. And that's what this looks like to me. Now, I get asked a lot about VoLTWAP, so I want, if you're paying attention to this, just tune into this for just a second. This is about the impulse and counter response. So we have the impulse, it's where the tension moves. Then you have the counter response where the tension goes sideways. VoLTWAP, we see this regularly. So we have our impulse, now we're in the counter move. Counter moves oftentimes top off where Volti ticks up. So you can see it moved up till we got an uptick right about here in this area, and that's sort of now the objective with this is to say where's our impulse, where's our counter move, and to help you build an expectation that a flat sideways VoLTWAP generally implies range behavior, which means mean reversion or ugly stop theory, and directional VoLTWAP generally means directional prices. Okay, so if you were to say look at the VoLTWAP right now, you could say quantitatively, we are in the counter move to this morning's impulse wave. You can see that right here, especially since it started to get a little darker there. All that darkness means is it's been flat for a little while, like a couple bars. That's what that means. That's why it turns dark. It's sort of a filter to just say, well, I'm not going to turn the first sideways bar dark. So this tells you we're in the counter move to this impulse. Typically markets impulse, then counter, then impulse, then counter, then impulse, then counter, and you get them all over, and you can use those to piece together in your head quantitatively, meaning it's not abstract at all. You can point at it, you can define it, you could feed it to a program. That's what that is. So you could see we're in the counter move. All right, so we move back down. This is the position I think that the bears are focused on. And you can see it sort of hit the back of their position, but what I would really like to see is bulls actually pick up a position and keep the bears underwater, because this is sort of a rinse and repeat scenario, right? Like we did something and then we're trying to rinse and then we got to repeat it. Well, we got to trap in some bears, see if that can happen. What usually traps in bears is not the same thing that traps in bulls. Okay, so when bulls come into the market, they look at things like growth. They look at things like togetherness. Everybody's doing it. They look at things like innovation, novelty. Bears look at things like that are sort of emotionally an emotional jerk, right? If you have a curve, this has no jerk to it, meaning the acceleration of that. So the position, the second derivative, the position, it's a nice, but when you have like a turn right there, your acceleration suddenly gets asymptotic. It's like boom, and that's a jerk. So jerks, bears tend to be jerks. They look for things that jerk your emotions around. So it's surprising. It was massive. It was the end of the world. Like these are the kinds of things that sort of trigger bears a lot. And then the bears have this way of grabbing onto an idea, like if this is time here, they have this way of grabbing onto it here at maybe point one. They get this is the idea. They sort of remember it over time. And they make these decisions over time, like vaguely in the background, trying to make this true at some point. Like if they can, it's true now, like it's the sun. Where bulls have a little bit more of a tendency to treat information that they had, like if this is the information and this, they tend to act on that information. If this is time, they act at the same point in time they learn the information. Or bears sort of lean on ideas. It's just, we see this a lot. So I think what's happening right now is that the bulls are trying to find a bearish party to trap in. Why? Well, that's what we've been doing. Like in the past, like this scenario right here is I think, I don't think it's the same scenario at all, but let me just look back a second here so you can kind of see that this is where the bears initially got screwed over. You can see they kept injecting capital into the market and were wrong. Then they came in again and tried to inject capital or just straight up wrong. This is the double down, and then look right here. They injected capital again and were wrong. This was a triple down. And then it blew off the market, and now it's coming down. So this is not the same thing that we've seen last couple of times. You need to put this context in. Just because it's crossing over doesn't mean it's going to pop back up. It's all to do with the narrative. This was them getting their third position, and this was them getting blown off. You can see that in the acceleration there. So was that. What this is, it's sort of going fishing. Right? I have too many N's. Just ignore that one. Going fishing. You know, it's moving the thing down, see what we can get to happen here. The bears are probing the market, see if we can trap in another group of, the bulls are probing the market, in my opinion. They dump their position, let it slide, see if we can pick something up earlier, or at a price, see if we can make it happen again. So my speculation here, the thing that I'm sort of anticipating is I'm saying, well, if we just got finished with that, well, then what spectacular thing can you do to bring in some bears? Think about it. What spectacular thing can you do to bring in the bears? Now, I have actually been thinking about this, and I had actually 2 conversations about this already. And this is my thinking. This whole thing got driven up by these ideas. Riots. People were seeing it on the news a lot. Pandemic. People are seeing it on the news a lot. And I think it was sort of like price action stuff. And then another one is old market mechanics, which is great. I think this is funny. Like market mechanics from before 10 years ago. We don't have the same market. So people are looking at a lot of these things, and there's a lot of fear and stimulus. This is what got people to make these horrible choices and triple down on a massive loser. So the question is, what can you do that can top like this? In the old market mechanics, that's easy. A lot of the older generation who traded before like 10 or 15, 20 years ago, they'll never let go. So this one, no problem. Just do it again. They'll fall for it again. No problem. Price action people don't use their brains. They just comply with whatever price combination happens. So we can just do it again. They'll comply. No problem. But this is what really hair triggered people. How do we beat that? I mean, the question is, how do we get you hair triggered again so that you're just like ready to sell, shut your brain off? This is crashing to zero. I know it because I had to wear a mask at the store, so I know it. So how do you beat that? That's tough. That's difficult. Because if you got jaded over this, you tried to sell the pandemic or whatever, and you got blown out of the market. As a big time investor, I'm thinking, how do I trick a jaded person into trading the wrong direction again? I mean, jaded people are the worst because they just don't care. One thing I think that we could say that jaded people have is they think they're smarter than everyone else. That's for sure. I think a lot of vegans are jaded. I think a lot of people are, when you're jaded, you think you're smarter than everybody else. Another thing is that you have a hard time. I think jaded people have a hard time like committing to things. You know, everything's a conspiracy. Everything's out to get you. Blah blah blah. So you kind of have a hard time committing to stuff. So I could see those being problems. So how do we take advantage of a person who's too smart and a person who doesn't really want to commit because they're because they're burned and they don't want to get burned again? Like, how do we get those people to let themselves be burned again? That's the question that we're being faced with right now. Now, what's nice is that I just have to understand the emotional state of the market and the questions they're asking. I don't necessarily need to answer those questions because they will get answered and we will see them answered. Like if I come up with the answer, I say, well, the answer should be this. Well, if the institutions pump out a different narrative or a different event, and I'm like, I want A because I'm so smart, and then they do B, I might ignore B because I was so sure about A, and that screws me. So I don't usually spend a whole lot of time trying to speculate how the institutionals do it. I just am ready for it to happen. Today, the idea was, how do we get bears to sell the market? That was the question. I mean, that's the thing I've been wondering this whole time. And I think this is just look at this. This is beautiful. This is just exactly what bears like. They like to see things like this. It's one condition into just insanity. So this is a good getting those bears confident again. I mean, really, it is abusive relationship, isn't it? You build up their confidence just to beat the snot out of them. And then you build up their confidence just to beat the snot out of them. That sounds like the definition of an abusive relationship to me. One side is always getting beaten up. Institutions are either bullish or bearish. They can play either hat, but they all work together. So there's not really a bull or a bear. It's just the side that's in control of the market. So control is all that matters. I also think it's important to note that a big move does not matter as much as a predictable move. 1,000-point drop in the market doesn't matter at all to me as much as a 10-point move I can predict. So if they got to drop it 200 points to get the bears in so I can catch a 10-pointer on the way up predictably and safely and reliably, so be it. I don't care. I don't care. The market is not here to surprise me. It's here to provide me with reliable opportunities as an informed investor. It's not here to represent reality. It's not here to represent poor people or society as a whole. It's here to represent capital transfers from the many to the few. It's here to represent the largest and most powerful ideas and corporations, and it's mostly indexes are just here to give me the easiest, most reliable opportunities to extract capital from the economy. It's not about anything else. So if you got to drop it 200 points to make this happen, I really don't care. Because while I don't think this was completely unpredictable, I'm interested in things I can do, not things that are exciting. So I think a lot of people are going, this dropped so much. That must mean it doesn't. It really doesn't. This is a machine to generate the volume it needs to generate to provide the returns that are required by the investors who are controlling. Luckily, they're all on the same page most of the time. So that's how I'm looking at this. Am I wrong? Maybe. Sure, maybe. But in my experience, I'm not. So, yeah. So what I'm still, you can see that this position right here. So now you've gotten through my rant about what I think this is and what I think's going on. We took out the other side. We need to make things happen to get the ball rolling again. We finally get to the spot where I'm looking for. This is where the bears come in. So can we get them sitting down at the table, placing those dumb trades again? The beautiful dumb trades. So why did these bears here sell? Because this is scary. It's got that jerk factor. It's a undefined second derivative of position. The acceleration. It got crazy. So that's what I think these guys are selling. And I think that's why it's going to screw them, because they picked up the idea. They caught the cold. They caught the mind virus. It's like in their heads, so they sold it. So that's what I see going on here. And you could see we got to the backside of their position and just bounced off it. So they're definitely here and they're definitely sitting there. Now, I want to point out, now we've sort of worked out to right now. We know where everybody is. We know what the objective is. Let's stop focusing on the stuff that doesn't matter, which is everything I just said, and focus on the stuff that does matter. What's next? Where do we go from here? Because that's all that matters. There's no profits in the present. There's none. There's just revenue. Profits are something that have not happened yet inherently. So if we're going to look at what's profitable, we have to look at what is not, what hasn't happened. So let's take a look. We got these guys positioned. The next thing we need to find out, and we talked about this a little bit, is will the bulls come down? We could get a sample right here. Another place the bulls could be, which I think is a little unrealistic, but velocity could move up and then sample from above. I call this a switchback, where you pop to the side and then sample from the other side. You get the velocity crosses under, and then there. That's another place it could be. I don't think it's reasonable, because this would take quite a while just to do this. And just so we could find, like, this is so much closer. Let's just pump in some energy in there and we could have that happen. So what's happening right now? Now, you could talk to me about burning options. You could talk to me about insurance on positions. You could talk to me about rent. You could talk to me about all sorts of things. But from my perspective, and remember, everything I'm talking about is not just today. This is like a 1, 2, 3, 4, 5. Like, I'm looking out a couple of days, but I'm trying. Good trading strategies always have a analysis on a much higher time frame than your trading entry and scope. So if you're looking at a daily time frame analysis, you should be trading like hours. Your profit targets are based on like a 30-minute chart or a 5-minute chart. Your analysis level should be much higher and much more grandiose than your actual entry and exit system, because it's not reliable. No analysis is reliable on the time frame it's generated. None. They're reliable on time frames under them. So that's why one of the problems that I see all the times with things like tape readers, it's like you can't get any lower than a tape reader. So you're trying to say that your analysis is going to be fundamentally good on the level it's generated, which has never been true. It's never true. So, okay, so if we get this to lean back and we sample our friendly neighborhood bulls here, why would the bulls do this? Well, the first thing, they lost control of these. This is problematic. This means that if bears decide to inject capital after moving into the future here, if they decide to inject capital, that they have a better probability of their capital generating revenue. They're in direction. There comes a point when your probabilities work against you. Too high a probabilities, the market mechanics naturally work against you. You can't have 100% chance of winning. If you do, you suddenly have 100% chance of losing. You can't have that. So right here, we got 16%. The bears could pump this for a while. Okay, so we've got room for the bears. The bulls would love to see this do this kind of thing, just like we did in the past. I don't think this is it's not the same situation, but it could look similar. In that if we can trap in these bears and they hold on, that's the key here. We triggered them. Can we get them to hold on? Then what the bulls could do is sort of slow the spread. Slow tensions descent. Slow tensions descent here by getting price to move up or something like this, like that. And at that point, it's really going to depend. Did the bulls make it happen? Did they get in? Did they trap? Did they position? Is that what's going on? Otherwise, I'd be really suspicious of a move back down tomorrow. If they did, then hopefully we could see this move up, and then maybe even to the close we get a nice curl as we, this prices move up. We curl as we stop out those people, and the objective of this curl would, just want to make this clear, the objective of the curl, the objective of stopping these guys out is to get price up to these guys' position. If the bulls do this, that's their goal. can we use them to get back to them? Okay? So in the future here, you don't just buy into it to trap them out for a reason. Like, this is very important that they build this correctly, or those mistakes that they make. And I think it's, if the Bulls did nothing, that would be better than making a mistake. If they do nothing, well, then the Bears will do their best to just sort of push down. You know, we won't get amazing pushes down if the Bears just did, or the Bulls just did nothing. But if the Bulls try and screw it up, then they are liable for getting liquidated, which is dangerous for the Bulls overall, like long term, because that could lead to big old moves down when you trap somebody in. So the Bulls need to do it right or do nothing. I don't want to see them mess it up. You know, like, here's what a mistake would look like. We get this to move up, you know, and then maybe like right here, the Bulls get some liquidity, right? And it's like they tried like, and then it pushes down, gets them upside down, and then you're like, oh crap, Bulls are upside down, and then we see it come down, and the Bears get a position, and the Bulls fill again and try, and then it comes down and they fail, and then it's like, oh, you guys gave it 2 like actual pushes and couldn't make it happen. That would be much worse. If we just saw price like come down, the Bulls get a sample, and there's just no push from them. This is just nothing. They just didn't do anything. And that's not nearly as bad as them trying and getting turned over, because that's less capital. I mean, there's going to be shadow people. There's always going to be people trying to trade with the institutions. There's always going to be that. So they'll get stopped. It's the big guys who actually can do the pushing that I care about. If they push and get trapped, that's when we run into problems. That's when we get markets like the one we currently have. The bigger players were pushing, trying to sell and screwing it up, and that's why it blew off. That's why the market spilled off after the thing. So that's what we're looking at. Can the Bulls do that? What would that look like? I think decay is the most reasonable because it's pretty close. But like I said a little bit ago, you don't want price like coming down and making this position positive. I mean, that's not, you want to keep them underwater, get a position, show that you can push, and then best thing ever would be to see that bullish position come in, it pushes up, and then we lean. And that a lean is where everything moves up trying to find, well, in this case, a lean up. It'll lean until we get to the next bearish sample. And leans are usually really great for decent price movements. You know, they'll do something like that. You see price pop up. And then it'll be these bears, and we lean up, let's say, and we get the next sample here, and we have these bears, and it's like, can we use these 2 positions without this curling up to get us up to this position here? That's the philosophy that the Bulls are running on right now. So can we do that? Well, we need a bullish position. We need one. We need one now. We need one coming up. So sitting here and floating sideways isn't, I guess it's not terrible. It's not terrible as long as it's not like drifting down, letting these guys have a win, because they haven't stopped out yet. We haven't seen this go, so they're sitting here. If we get this down to the lows, okay, then these guys are going to be in a position. It's going to be like, could the Bulls still fix it? Yes. But shame on you, Bulls, for making this riskier than you needed it to be. Maybe that's what they need. More risk so that the Bears can get more enthusiastic. I don't know. But that's where I'm looking at right now. Let's take a look. I think at this point we could actually take a legitimate look at what the close might look like, what the objectives are, because that was such an aggressive move. It's so epic that, you know, the responses I don't think are completely random. Like, they're sort of predictable. Not that you could use them to trade so much, as sometimes the things that are highly predictable are not actionable. They're still useful. It's just that you kind of get this. We could look at the dichotomy, the different directions. So if the Bears continue, we say we get the Bears, right, to continue to get some moves down, we get a new low for the Bears. What the Bears want right now is, I mean, for the past couple weeks, right, they've been just getting screwed over, right? So today, they're getting this move. They got a price move. They're all like, yes. So now that they got a good spot, the thing that they want is to pump the market. We got to pump the market. We can't just, 16% is not any version of security. 16% could vanish in an afternoon and go right back to the other side. It's a good start. And they've got both of them over zero, which effectively gives us a trend cap, which lets us know, again, quantitatively, that the trend that's been going on just got kicked in the face, especially when you put it into context here. The difference here that I'm making a distinction is that I like to see the fact that it was positive, one crossed and then the other crossed, and they were roughly the same time, almost the same time, where on these ones you have this one opening lower, crossing, and then it took a little while before. I like it when they both cross at roughly the same time. That lets you know, there it is. That's where that we have really put a problem in the current trend. So that's what I look for with the trend cap. It's more about them crossing at the same time, especially not right at the open. I like it a little later. It can be at the open, but I like it a little, like this looks like a trend cap to me. We have put a stopper in the bullishness of the market. Doesn't mean it couldn't continue. It's just currently that's what happened. And I think that's what we're seeing. So the bears want to see this down here, or if they could, they would love to get it some maybe acceleration, get us all the way down to here, or at least match this. What is that? A 30 would be 30% tension. I think they'd be happy with 30% tension because that can't go away right at the open, or at least it probably won't. Like there's a high likelihood. The bulls would have to do some footwork. So think to yourself, we want to pump the market. Pumping the market always means trapping in a counterparty, somebody on the other side to run out. That's how you pump a market. You don't do it by injecting capital. You don't do it by sharing news. You do it by getting the other side in, turning them upside down, and making them pay you. So that's what we're looking for right now. Can the bears trap in a counterparty? At the same time, the bulls are doing a very similar thing. The bulls are saying, can we trap in a counterparty? Can we get these bears to do what they just did and then repeat what we just did? And what that would look like is we need to slow the descent here and even get it to kind of curl up into the close. So you'll have to ask yourself which you think is more likely of an outcome. I like to stay on one side of the market until I see the other side of the market perform. I know this. I know it has moved down. I know that. It's a big, scary move. I know that. I see that there is a bullish position that didn't work earlier. I know that. The reason that I'm sticking bullish for now is not because of all this stuff. It's because I am data driven. My narrative is just the way I metabolize data. That's what I'm doing. I'm turning data points into something a social brain can deal with. If you don't do that, you can't actually consider or look at data. You need narratives as much as you want to not. You must have them. So yes, I see all these things, but at this point, I see that the bears were able to, at best, push price. And yes, they're given an opportunity here with tension. Yes. But the question is, can they actually perform when rubber hits the road? And I have not seen that even opportunity yet. That's what I'm waiting for. Can you do it? If the bears can perform, which never happens, if the bears can perform when it matters, then I say, okay, the market is bearish. We have bulls who couldn't perform. They couldn't make things happen. The bears were able to take that. Structurally, everything works out. It checks out. That's when I start looking at supporting one side or the other. At this point, I just see the bulls having blown off the bears, so the bears are screwed. They lost. They're terrible. The bears doing their very best to capture a slide back down into a vacuum, and the bulls getting prepped to give it another try. It doesn't look to me like the bulls have actually really screwed up yet. So I'm still waiting. I want to see some performance by the bears before I say that this is bearish. Now, it doesn't mean that you can't make money selling. That's not the case. It's just I don't want to play on the side of the market who's not actually in control, both the probabilities and psychologically. I need to know that they're dominating the other side of the market. That's what I care about. So I'm still waiting. I know a lot of people probably have a lot of ideas about what's going on and this and that. But for me, this looks to me like fishing. The market went fishing. They said we cleared out the last story. Let's start a new one. We got to revamp that. And we're getting into situations where that we could potentially build a new narrative between players. That's what I'm looking for. So which one's going to play out? So if the Bulls get this, they get a hit here, which, I mean, you could see this, right? Like let's get a little closer. So we can really get a look at, oh, sorry, I got to push. There's control. There you go. So look right there. You see that? We got under zero. So we got just a half a second under zero. It was a little bit under zero. It flipped back up. And there's our trapped orders. And look, it's even right on the backside of it. Okay, we're getting, it took longer than I wanted, but now we're getting this spot. So once these orders are done, then we're going to go, all right, we're sampling these bulls. What are you guys going to do? Now, if these finish up and we see that the bulls kind of hit, so you see price pop, maybe 1, maybe 2 points, you see a little bit of sweep, you pull up your faster moving charts, you see it pop, you'll see it. And then you look for some impact here. Now, I think the best strategy in this situation, okay, this is just experience talking, so I can just tell you my experience with this, all right? They want to use it's like a feather touch kind of thing. Okay, so if you push price up and you curl tension, it's clear that you're injecting capital, and the other side's going to spook. So if the bulls do choose to pick this up and consume the liquidity they're being offered, the orders that have been generated, then you see price start to move up. And I think the best thing to do is just sort of slow down tension. You don't want to tip those bears off as long as you can, especially if your position's working and you want it to move. And then when the bears finally realize what you're doing, then you see it curl up. And at the same time, you'll see like bulls injecting capital while the bears are trying to exit, and you get the sort of sweep, the bigger moves at the end of it. That's how I would see this play out. You want to use a nice feather touch since we're trying to get something started again. As we're walking through this, I'm sitting here thinking like, this is lame. Does it seem lame? Like like this bearish position is built off of something that just, I don't know, a big move. It seems kind of lame. I don't know, like small-minded. Like it's just so little to say, oh, price moved, let's sell. That's just such a, like it's not built on conflict. It's not built on anything real. It's built on just FOMO. And that's not an expectation I have of an institution that's going to get trapped. Like it just seems so little to think that. Like if the bears came in and said, we trapped bulls, let's liquidate them, and then they were able to run it, and the bulls were like, oh no, and they like sort of liquidated but then filled immediately, almost like they were just playing dead or something like that, and you're able to really let the bears feel like they had all that control in an attempt to get their confidence up to fill, then you want to get into it. Just to move down feels just little. Like just yesterday, the bears were holding on to pandemics and riots in the streets and copless neighborhoods and fighting for the presidency, and today it's price moved. It just feels a little to me. So here comes our bulls now have their position. All right, so we finished up. It's done. Now it's done. So they have their orders. So now what we're going to do is I am going to mark this because it really doesn't matter if they buy or sell. This will be a spot that I care about. And you can see it lines up pretty close to that position. So it's like, God, it just feels little. Is that just me? Is that just me? It's like, where's the grandeur? Where's the excitement? Where's the fear? Where's the fun? Just I don't know. I've been too excited. I've been spoiled with exciting, clickable news. A little move in the market's just not enough for me anymore. I need more. I need a bigger hit. First hit's free. Okay, so the bulls we're seeing this move down, and you want to give it a little bit of room here before we say that they didn't act yet. I think, yeah. So we still have to give it a little time. We're going to be able to find out what these guys are going to do, but it's looking like the bulls have basically done nothing. They did nothing. They just sort of saw the stuff, let it go. I mean, you could see it's just sort of continued to move down. But give it a minute, because this happens often. Give it a minute. It could go like that and move up. We could get down to the lows. The point here is to figure out what's happening. Once you get your once you get in your narrative and you're like, oh, I see what's happening, everything else is cake. Before then, you're taking higher risk positions. It's much riskier to try and participate in a market that you can't see what they're doing and know what's coming up and what's trying to happen here. So we got to wait for that narrative to really show up here. So at this point, it's looking to me like the bulls are like, maybe-ish. Not enthusiastic, but we'll give it a minute because we will. Now, if these bulls can do a little bit of hitting, we'll see it get through this little position. It'll pop up here. We're going to get probably a 34.77, right? That'd be about the VoLTE. At that point, we've got most of the position upside down. At that point, the bulls will be able to get things moving. And then we can sort of see if we can make this happen, because this is the whole goal here, is like, can we get those bulls in the market? Can we get them moving? Okay, so buy orders are coming in. Now, something I don't often talk about is that we say you can use trapped orders to sell to your clients. So we could take the buy orders and your clients want to sell, and you could hand them to them. Say, well, here you go. You could sell, and you match them up and the client's happy because they got filled, no slippage, everything's great, especially if they're a larger client. Or you can take those buy orders, which are coming in, hold them for a second, and then use them to stuff the market. Like, you fill them in a way that gets markets directional. So what I'm looking for right here with these buy orders is to see if these guys can use them to make price directional. I love seeing that because it means that the institutions are using their resources to drive the narrative, to defend a concept, an idea, and I like that. I like seeing that. So we're getting some buy orders coming in. This is looking a little bit better. It was a deeper dip. Okay, that's just difficult. It doesn't mean they're broken. So now what we need to see, I'd love to see at least a slowdown, a little intention, maybe not a curl up, because I think if you curled up, then we'd start going, okay, you're spooking these guys. So we just at least slow this down a little bit. We could use them to mush and then just inch our way up slowly would be great. This would let the bulls kind of get into this idea. We're going to trap these bears upside down, inch our way up, work our way through using what we have available. Now, if the bears just do nothing, we don't see the things that I want to see. We don't see these buy orders used to make a market directional. We don't see tension slow down. We don't see price climb. We see it get up maybe here and then kind of move down. At this point, I start to go, oh, you guys are irritating me. And what happens at this point where you start to see this, my tolerance starts to drop, because my anticipation is that you have big enough institutions trying to drive these narratives at this moment. There is a time factor here. You don't have forever. And the fact that it's such a large move that I think could be an objective, that if the institutions are going to come in and participate the way I think, that's going to create some demand. And that's why it should really not have problems after you kind of get things moving. Sometimes there are, but really, when you get in the right spot with the right narrative, with things working out the right way, they just perform. You don't have, because you know what they're all thinking, you know what they're trying to do, you know who's playing, and you're on the right side. They're going to use their money to defend you and themselves, because if you get long here and they were buying here, right? Then if price moves down, you both lose. So basically what you're negotiating is saying, look, if you want to win, I got to win. And so they start putting their resources to work in your favor. So when you get the right spot, things tend to work. You need enough conflict, you need enough problems, you need enough going on. Otherwise, you're just too early. The narrative's not heated enough to create the kind of money and volume that the institutions need to make it worth their time. It's very expensive and risky. So if you're not going to make a lot of money, or at least think they are, it's not really worth the time to put up that risk and then go tell your investors all about the terrible risk taking you did, and then they get mad at you, and that's not good. So, okay, so that's where we're at. And you notice this, it pushed, we finally got it to push down and then pop back up, and we're getting right there. You see that? Trapped orders come in again. So it looks to me like we have a bearish liquidity here, and we're getting some more bearish liquidity here. And the question is, oh, are these bears trying to do something here? Is that what they're doing? Are these bears trying to do something? And looking at price, you see we just skid down from 68 and it went pop down. These bears right here in the face of these bulls, and they're punching it down. That's what's going on. And at this moment, you need to recognize the gravity of what this means. This is where the institutions fight, not here. If price is moving in a big way, you're late to the party. This is the fight. The bears, in my opinion, just took a swing at the bulls. That's what this was, right? We popped down to the 68. You see that? So it went from 68 down, kind of came right back up, and it was right after those bears got in. So you could see right there. Did you see that? The bears were like, oh, I see what you're doing. You're trying to trap us in, and they see what we're seeing. So they're like, plop. They took a right hook and just really tried to swing that. Now, if they're going to have to hit, I think a little bit harder than that, because I think the bulls' motivation is pretty decent, right? They want to get up here. That means they're going to inject capital if they think this is a good thing. But the bears are sitting here going, oh no, you're not going to do that to us, So the bears are a bit on the offensive, and the bulls are, I guess, a little defensive. But the bulls, actually, I think the bulls are a little more offensive. They're saying, this is where we're going. The bears are more than anything, they're defending probably this position's profits, I think. So you might be able to go flip over to those options you have. Are these bears buying insurance because they're nervous? What does insurance look like? Rent. This is what insurance looks like. It means selling ownership temporarily, right? So they're going to sell puts. They're going to take the money in. They're going to sell the puts. That's rent. Fear is where that you don't want to lose any of your profits. Really you should just cover, but positioning is a big deal. So if they're fearful, now if the bulls think that they're concerned, you might go look and say, at this point, there's no rent. I mean, they don't have an asset that's worth renting. So they're going to be long. Yeah, they're going to be long puts. So long puts, short puts look a lot like more puts. So if these guys are feeling the pressure and they start piling in, there's going to be a lot of puts down below. And they will be between this group and this group. So if you see put volume rising, that's who it is. It's these guys who are concerned, and they're going to be longing some puts to kind of hedge that loss. So maybe they own a put for here and they paid, down to here for it. They get to capture this and pay out this area right here. So that's who it would be. And so watch that. You could watch that. I'm not watching it, but you could watch it. You can see we're getting it popped up, and then we got a switchback, which this was a switchback and this was a switchback. And now we've got the volume coming in right here. And this is going to be the bulls right there. So we got our bears came in and they're like, hey, taking a swing at these bulls, which is kind of gutsy. Ish. Not really. I mean, they got the whole move behind them. They're like, oh, blah, blah, blah. Okay, so now the bears are coming in. They're taking a swing, and the market moves down, and the bulls are like, whoa, and they're getting another position. This is starting to get kind of tense right here. We almost got everything we wanted for the bulls, and the bears came in and said, no, this is a big deal. I mean, you can see the structure here, right? This isn't random. I don't think this is random at all. This is the bulls wanted a position on the backside of here. They called down and got it. The bears were concerned. They got it. The bulls are like, are we going to fight back or are we going to let them have it? Well, personally, I think you have a position underwater. And it looks to me like these bears are getting all hot and bothered about this. So I think they're going to take a swing. We're going to watch. What's going to happen? If this bullish position goes underwater, this bullish position is starting to be at risk. I think that bullish position probably got held onto, but these both will get liquidated at the same time somewhere down here. You'll see it because tension will go accelerate. It'll be kind of slight. You'll see it. Tension will accelerate. That'll show you that these two positions got eaten up. And who did that beating? It was this position right here who was like, They put up a wall. They didn't want that to happen. Now we're pushing back. We're getting another bullish position. So this will make a third one. They're putting some money on the table. Can this happen? So we haven't seen quite a strong push out of the bulls yet. We haven't seen quite a pop up, something that lets you know it has advanced. It's lurched. It kind of has this feel to it. So it's hard to notice unless you're actually in a position. If you're in a position, you know the lurch. It's like, funk, and it kind of shifts in price. And you feel a little bit better. Not much, though, and that never goes away. So it'll lurch, and then you know that your side sort of made an advancement. Now, it's important about that lurch, and this is very narrow stuff, of course. Your little lurch forward's got to accomplish something. Think about it. If you come in with your money and you're like, I got a whole bunch of money. In fact, I got some fun money that I picked up on my vacation. You see this? It's hilarious. Trump bucks. I saw them in a gas station. I thought they were hilarious. Anyway, you take your fun money. All you had to do was vote for Trump, and then he gave you his new currency. So you just vote for Trump, and he gives you $100. That's it. That's all you got to do. So if you come in with your money and you inject it into the market, and then your money goes in and the outcome is not even close to what you needed or anything useful, you start to get a little worried that your money's not doing its job. It didn't accomplish anything. So like this little lurch here, you see how that pushed up? It did not turn this position back over. This position struggled. This position here is, we're getting some troubles here. If this tries to lurch up, we got to get this back over, like this kind of thing. That's what has to happen. The bullish positions, while I think make sense, their timing makes sense. All the pieces are there. In terms of narrative and accomplishment, I'm sorry, bulls, but you didn't accomplish what you needed to do. You didn't do it. So I honestly think at this point right now, the bears are going, Let's see if we can push a new low because the bulls are struggling. Now, remember, this is all theatrics. All of it. None of it's real. It's all just theater. But there is a level of theater which you have to take it serious. The level of theater that matters is the one that the institutions are on. It's all theater. Money isn't real, never was. The whole thing's fake. So at the end of the day, the thing that makes markets work is that there is a level of theater that institutions participate in, and their choice in level of theatrics has to do with possibilities. You can't take everyone's money all the time or no one plays. You can't. And that's the overarching fundamental law of the markets. If everybody loses 100% of the time, you have no suckers. But then again, there are people who say there's a sucker born every second or something like that. So maybe you can. I don't think so. Okay, so right now I think that's these guys, they're not doing their job. The bears from right here going, let's do this. Let's do this. They're starting to get down. And now we're seeing some sell orders coming in. I think these sell orders are similar to the buy orders we saw here. I think that it would be beneficial to use those to push the market down through the lows right here. If we get that down through the lows, these bears are going to get more motivated. The bulls didn't do anything. They accomplished nothing. They didn't do what we needed. They didn't turn that bearish position back over. They got a second chance. They didn't, again, turn the position over. So, right? That's where we are. You could pick up let's take a look. I'll show you what it is that I look for when I pull up options. Volume profiles and stuff are nice and neat, but I actually think the open interest is not nearly as important as, maybe I should. Um, I look for the differences in premiums. Open interest is something I do look at, but so I like to come through here and you kind of see like 26, 29 was at like 3, 29, that's like a 2, so it's like 3, 2, 35. It's about 2. So this seems a little higher priced right there at the 65, 34, 65 put. So you come over here, 34, 65 is just right in there. The 34.65 put looks a little bit like the prices are a little bit higher than around them. That could show us a little bit of those bulls maybe hedging some of their positions, especially since options are so expensive. Like, I don't know, that you could go out a little bit further. And I think having a day or so matters to me more. You have one on there, you still have a whole 24 hours at least, at minimum 24 hours left on it. So this is still probably pretty good for this situation right here. It's not going to be good going from, but this little fight right here, I think having 24 hours on it's just fine to cover your problems that you might run into here. So look, we're getting down right now near the lows. You see that? So we're right up close to those lows. We push down. We got ourselves a lower low. We got ourselves a victorious bear, right? Here's our bears. And, oh, the underdog. Here's our bears. Oh, you guys did so well. And you defended so well. So we've got the bears in this way. And the way is, oh, you did so good. You underdogs, you victorious folks, you. So motivation should be coming to them. And I mean, you could see it, right? You see this here? We were leaning up towards this, and you see how this sort of started to taper off. We've got tension moving down like this. So probably close, I don't know, here at this rate, I'm going to say 45%. That's my number for the 45%. We could get this down to 45% if the bears keep moving this down. If they really do a good job at taking out these bullish positions, if we're able to get this down and they can do that, we could get down to 50 or 60%, which would be good for the bears because that means they pumped the market. This is important. It's narrative. You might be sitting here going, "Oh man, well, why this is such a big move?" And I'm like, "Yeah, well, it is a big move. One of the reasons that it's so big is because it's not really realistic to trade. It's realistic in terms of prices, but it's not realistic to trade. I mean, this is the earthquake. You trade the insurance policies after a massive earthquake, not whether there's an earthquake or not. And it's just not predictable to really do that unless I've been tracking earthquakes and just bet on an earthquake in Indonesia or Chile. They're just shaking all the time. Anyway, so we had our earthquake. This is the response. So we're building that narrative. Once we really get the narrative fixed into place, you start to go, I see what's happening. I see why they're acting this way. You start to look at your tools that you have and ask yourself questions like, okay, well, if that's what's going on here in the little battle, how's that going to reflect coming up over the next couple bars or hour or so on your indicators? So I see this as a little fist fight, and the bears are a little scrappier than the bulls here. They're pushing it down, and you can see even now, like there is some acceleration here, which I think is indicative of these bears pushing. So I don't think the bulls have dumped yet. If you went long here, like you're probably like, well, push a new low or something like that. So I think really what's happened is these bears came in saying, shove that down. And that's what caused this acceleration here. So this acceleration is not built off of the pain tolerance of the other side. It's built more off of injecting capital. And good investments aren't ones where you're constantly putting money in. Good investments are ones where you put the money in and you step back and the market does all the work. So can these bears get this market to do the work for them to the downside? And currently it's looking like they're doing pretty good. Yeah. In terms of narrative, they punched these bulls right at the right spot. It looks pretty good. But then at the same time, get this thought, it's like, well, my whole objective was to build confidence in the bears. Wasn't it? Wasn't the whole point? Wasn't it? Is that what this is doing? And then it's like, is building confidence in the bears the same as a bearish market? Yeah, because I think once bears are confident, it's over. I think bulls develop confidence and they use that in their favor. I think bears just are never confident, in my opinion. It's the practice of developing that confidence that drives the market. And it's what makes it difficult. It's also why I don't really like them and other reasons, but I'm not a big fan of the bears. But they're still doing well. They did pretty well right here. They were able to push that down. They were able to get those positions upside down. Still haven't, like I said, accomplished really what they need to do. This does look good for them, but I think the accomplishment is getting this to accelerate, getting these guys to liquidate, probably pushing out a new low before they're going to do that. You get those guys, and I really think this position's still holding on, and they would liquidate as well. It would look pretty amazing, but they still haven't pushed that new low. So they're looking good, and this is starting to move back up, and it's starting to make me think just what I said. Wasn't the goal the whole time to build confidence in the bears? Wasn't that the whole point of this practice? Wasn't that the whole experiment? Can we make the bears confident? And it's like, is that what we just did? Is that what's going on? Is that why this is starting to pop back up out of those lows? Was the whole point just to do that? This is early narrative. So we broke down the last narrative. We're on to the new one. This is the new one. This is how we build that. Yeah, that was the goal. That was the goal, was to build that confidence. Did we do it? Well, I've been praising them for the success here. So in terms of me, yeah, they were able to pull it off in my head. I didn't execute anything because for me, narrative's more important. I still don't feel like I really got a good picture of exactly what's going on. But I can tell you that these bears are motivated by what just happened here. Getting a new low would motivate them a lot more. I can tell you that these bulls are disheartened. They're like, this sucks. I can tell you that for sure. They're very unexcited about the events that happened. I can tell you that a move down here is going to push those guys out and make the bears extremely excited. And I would not be surprised if the bears just really punched it if we were able to get a move down. But I can tell you right now, if this pushes up to here like that, the bears are screwed, because that means the bears had everything from confidence and stuff like that. That's not that you should be betting on it. I'm just telling you, if this moves up to here, what would happen is that the bears would have had success. They were able to trap some bulls. They were able to get targets. They were able to have everything lined up, and then it falls apart and they can't accomplish anything. That's terrible. So that would be no good for the bears. Right now, I'm looking at this going, I think it makes more sense to pop down at the lows. I think that's sensible. But in my head, I'm thinking, weren't we just trying to bolster up the bears? I mean, isn't that what we were trying to do? We're trying to get them excited. Like, isn't that what the goal was? Yeah, it was. But they're doing really well. So until that changes, I'm sitting on what we got. I think it makes more sense that these guys messed up to accomplish a goal. This position didn't accomplish the goal to drive it up. So the most sensible thing to do here is to just go, just a little bit. Just a little bit. We get tension to come down, and then we can take a look at what's coming up for that. If the liquidation happens, it's really common for the bulls to try to regroup, I guess. But let's take a look at something that's blaring us in the face right now, okay? And maybe I haven't said this, but I want to point this out, because this is one of those rule of thumb things that you just kind of have to always be thinking. If prices move up right now, the market moves up, velocity moves up, and by the time a move up would sample the bears. A move up would sample the bears. A curl up would give a zero test that samples the bears. Can you see that any move up in any real way is opportunity for bears versus bulls? Can you see that? Can you see that? Can you see why I'm thinking that these bulls are upset? I mean, I can see, I've modeled out what this would look like, but looking at the way the numbers are lined up and how these bears have done, I think we're getting a new low. That's the most sensible thing. But I can see the emotional underpinnings here. You don't usually get to screw up and get your money back. And I think the bulls screwed up. Maybe it was intentional. I don't know. Intentional or not, doesn't really matter at this point. Mistakes were made. It didn't work. So I think a push down, and if I were to just look at this, which is my favorite way to make these decisions, I'd say $34.35. That's what I think. $34.35 would be a spot to just bam, because bears are all about bam, so might as well. Okay, so if the bulls pick up anything from here moving forward, let's take a look at what they could pick up as this moves down. We'll probably get down. We could look at a multi-day decay retest. So I can't really use, I mean, you could sort of use it. You can't really use yesterday. It was never really, it was a pivot. The next thing to use is this here. So this one here, so about -8, -9. If it got under negative, if it hit -10, we'd have got both of those. So if decay moves down further, so if we get this to sweep down, this is a situation where you have to understand how to use a decay retest. Okay, so we're moving into a different section of the market. You know, the bulls of. So we're looking at what would a decay retest look like at this point. Well, the first thing is that a decay retest, you know, if this moved down and we got ourselves a retest, there are 3 things. The first is the retest, which is using decay, and this, in this case, it's a multi-day. The second thing is trapped orders, which is these. You want to see the bars turn green. That means sellers are coming in, you're using those to buy against. And the third thing that I look for is the new extremes. So you want to see the market actually kind of move in the direction. So you see it hit. A lot of times on a multi-day decay retest, you get a wide, where it's really wide, and then you get a short amount of time before the next one. So it's like, and on this one is the one that I like the most. This one kind of lets you know what's going on, but I like the next one better. And then you look for some new highs or something coming in after the decay retest happens. And that lets you know things are sort of lurching in that direction. It's really helpful to get you some good timing. So the bulls, that's their best bet for an opportunity to get in. Remember, a decay retest, I often call them a risk reduction. The reason that I think these are important is because they're not your typical liquidity. They are a situation where that you have no other options, you're screwed, but you want to play. So those are really the 2 criteria that I look for. 1, no options. So like we can't get decay to come down and give them a sample. We can't get velocity to come down and give us 30 minutes, not about to give them a sample. There's no samples here. There's no options. The second thing is that they want to play. And the way I determine that is I look at previous bits of liquidity and I say, well, did you hit? Does it look like you're actually trying? And to be honest with you, I'm sorry. I just don't think that the bulls really want this. They just suck. Right now, it just sucks. I mean, look at it. It was clear the bears clocked him in the head. It moved down. We had a little moment where and nothing. Nope. They weren't able to pull it off. They just couldn't. And look, we're headed down. Why? Because they screwed it up right here. This didn't work. This did. This failed miserably. So that's where we're at. We're moving down further because the bulls didn't make it happen. So now we have to look at what the bulls could do, and that means getting decay down to, so we got the decays at -7. So we get about -9% or so, a little lower, maybe -10%. Remember, that will hit those pivots. Then we can look at a decay retest. A decay retest is a moment where everything else, there's no other options. This is all you've got. You can come in and pick up that decay retest and use it to kind of spring price a little bit in your favor, just a little bit. And that little bit of edge reduces your risk, essentially. And that little bit of edge can get the ball moving. That's the point. It's not because it's liquidity. It's not because of cash. It's not because of this. It's that you're able to come up with a way that sort of reduced the risk in a way that allowed you to kind of pop it up just a little bit. So you usually see in a decay retest, prices move down, you have your test, and you usually see price kind of pop up out of it. It doesn't mean it's going to keep going or going down. This all has to do with narrative. This little pop here, though, is pretty reliable in the right conditions, if you have them. And at this point, I don't know, I'd love to see that the bulls actually wanted to try. Before I was like, I think you guys are going to pick up a risk reduction. But at this point, I mean, I'm just sitting here going, I don't think you guys did anything. But if you remember earlier, doing nothing is far better than trying really hard and failing. So maybe it's the less bad option for the bulls. Maybe. Is that what it is? Okay, so we're heading down. We got to the 30, 34, 30-ish there. Getting a decay retest would take a little while. Well, maybe not. We just got to get momentum to kind of, basically, energy is the form of money. So you take money and you pump it into momentum, then decay starts expressing that energy that's coming into momentum. That's really what you're looking at here. So we need to see some energy get pumped into momentum. It doesn't necessarily mean that you'll see lots of movement or anything. Just that's how it works. So we need to see a little bit energy pumped in here. Now we're looking for acceleration in this. So let me zoom in a little bit so it's a little easier. I tend to not zoom in on my charts. I did zoom these in a little bit so I can talk about them, but I tend to go off the philosophy that if you can't see it while your chart's at its normal settings, you shouldn't. But we'll get a little closer so we can keep an eye on acceleration. I honestly think if you're zooming into like this, you're doing it wrong. You're just getting too close, nitpicky, micromanage. It's just stuff you got to be able to just see. You got to go, what the heck happened? All right, there we go. Okay, so we'll keep an eye down there. We're going to be watching for acceleration. You can see a little bit showing up here, and that's going to show us where those bulls let go. So at this point, I just want to stop and take a moment to talk about, if you've been watching this, take a moment to talk about conflict. This is a very underrated topic, and it's huge. It is such a big deal to me. And I constantly bring it up, and I never see it repeated. I don't typically see anyone ever talk about it. I bring it up regularly, though. I think, maybe I'm not. Conflict is where that you have multiple legitimate opinions and actions at odds with one another. They're fighting. So if you have right here, we didn't have conflict. We had opportunity. We had expectations and things like that. When we moved to here, again, we had opportunity. Right here, we started to get conflict. The bears tried to FOMO. The bulls tried to trap them in. The bears came in and defended. And the bears no longer are getting the things that they wanted, and they're sort of stuck. That's when conflict starts to rise. I like conflict. I don't like trading without it. I don't. Conflict is sort of a timing mechanism for me. If you don't have like multiple legitimate opinions, you really don't have conflict. One legitimate opinion is peace. Two conflicting gives you conflict, but it's much better, or really you can only measure it by looking at the positioning. So we saw the bulls, we saw the bears, they started to fight, it moved down. The bulls were upside down, they had problems. We were able to say that it moved down. We only got to 34.40 at this point. That's probably the best that we're going to get out of that. We got just a smidge of acceleration out of that, out of tension. We didn't get decay retest, but at this point you could see that the conflict's building. We didn't quite get this to accelerate down the way that I think you'd want to. So what does that mean if it doesn't quite give you everything you want and then moves back up? You start to get conflict. This is very frustrating. If you're bullish, you're like, oh my gosh, it's coming back up. If you're bearish, you're like, did we succeed? Didn't we? And that's what creates conflict. Conflict is beautiful because it gets people in the market. It makes stuff happen. I need conflict. And up until now, conflict hasn't really breached my threshold for any action. There's been some things, it was sort of predictable. We could see what was going on. It looked good. Maybe you took advantage of it. Maybe you didn't. The point is, at this point, the point is that we need conflict. And I'm seeing that this didn't quite accelerate down enough. We did pop down a new low. That means this beautiful victory by the bears is... Was it? Wasn't it? Is it over? Is it not? Ooh, this is going to get heated. These people don't know what to do. It's not quite a victory. It's not quite a loss. The bulls, perhaps they're exposed. I mean, just think about it. If you bought into here and you decided to hold, total, you decide to hold, right? Why did you do that? This is where it gets good. Why did you expose yourself to higher levels of risk, Mr. Bull? Why didn't you dump your position like a good bull should? And it might be the bulls say, well, we were just trying to increase the confidence in the bears by letting them win, sort of. And then you go, oh, crap. Now, I want you to ask yourself one question. I bring this up all the time in videos, and this is the moment to ask it. When this pushed down there, right there, did these bears have the gun to the bull's head? Or they like, bam. Did the bears have control of the gun? Could the bears have pulled the trigger and eliminated those bulls, and we would watch tension curl down nicely and then maybe cool off, and price had gone. Did the bears have legitimate control of the market? If you hadn't picked out that narrative, you might have all sorts of opinions. But in my opinion, what I think is that we watch the bears have absolute control of the market. This is done going down. It's headed up now. The bears failed. It's over. The bottom is in. They had control. It's done. You don't get the gun, put it to your enemy's head, and then say mercy and expect anything but losing the war. It's over. They're done. They lost. This is my favorite conflict because this is stress testing. Stress testing says you give the counterparty full control of everything. You let them have your life in their hands and they fail. That is defeat. Oh, it is the sweetest defeat. It is the best defeat because it wrecks you inside and out and you can't act for days because why didn't you just do it? And I'll tell you why, is because institutions will wipe you out. Retailers are dumb. You're too nice to take out grandma's 401k, aren't you? But an institution's not too nice to wipe out your silly little bank account. Institutions don't pause. They don't stop. It is a failure emotionally. It also exposes who you are. If you're an institution who couldn't pull the trigger, you are not an institution. You're just a person losing lots of money. So they lost. It's over. The bottom's in. They screwed it up. They stress tested this emotionally, and the bears blew it up. They failed miserably. All they needed to do was a little more, and then they would have won. It's over. So at this point, it doesn't really matter. We know that the bears don't have what it takes to drive a market. They came in with their hook, pop, and the bulls are like, oh my goodness, you hurt me so bad. And the bears are like, yeah, oh my goodness. And the bears are like, okay, everybody go. And the paper tiger comes out. It turns out the cannons were just those little pop thing, and it was just fireworks. There was no weapons. There were no teeth. There were no teeth. These bears have no teeth. That's what I think is going on. That's what I think this story is telling me right now. I think that these, so we're back up to that position. They had their chance. Oh, yeah, they didn't know. That's not stopping out the bears, the bulls. That's not defeating them in victory. That's not the beautiful win that they just were faced with. That is failure to pull the trigger when you needed to. And now you're going to pay the price for that failure. So that's where I think this market is at. What comes up in a situation like this? You get painstaking grinds. I think once the market sort of gets a sense about this kind of thing, which is what I'm picking up on, you should hopefully hear in the enthusiasm in my voice, is that the bears have no spine. Now, is it true that the bears can't do anything? Oh, no, of course. You can never disrespect a bull or a bear. I want to make a distinction here. A bull or bear, either one, they're market wide. They're huge. They consume liquidity, meaning they approach the equities market and say, we need $10 million in positioning. Give us, they think $10 million. A buyer thinks 10 shares in XYZ. They're very different. A buyer has a stop loss. A bull has a risk tolerance. They're different. One of them, you can just touch them in the right spot but a bull or a bear, an institution, you have to push and configure the market in such a way that you breach their risk tolerance. Okay, so I think we have just established that these guys didn't have what it takes to make it happen. Okay, that's where I'm at. I'm enthusiastic about it, but I'm not quite ready to participate yet because I need opportunity to show up. So what am I waiting for? Well, the event, right? The thing that I need to happen, which is the moment. I haven't seen a moment yet. All I've seen is just the bears failed. So I'm sitting here going, what's my moment look like? Well, we already discussed decay could get us down to like a negative 9%. That would give us a risk reduction after we establish the bears suck. That would be a good moment. Or probably one of the best moments, because that's probably a little closer. Like a move down like this is going to maybe price. It's going to look a little bit better to me as an opportunity. And oh, look, here we go. 9%. You see right there. 9, just as we're talking. Okay, so we're getting a risk reduction position showing up after we established what the bears are made of. So now we're gonna pay attention to this. We need the risk reduction. We need the trapped orders, and then I really like to see the new extremes. I call it lurching, the lurch forward. This is what I look for in this situation. We have put the bulls' backs against the walls. They're standing with their backs to the cliff. You know, it's like if we just keep pushing, they don't have a choice. They have to fall. There's no saving themselves. So this is a spot to look for that. We want all those options happening. So we're getting our little 9% that we wanted. So this red line here is just tracking the current value. So if you have it on, you can see it popping down below there, getting about to there, you know, a little low. There we go. So we've cleared out all these now. We're retesting those. And if it doesn't work and the bulls do nothing for whatever reason, then the next one would be down here at negative 24%. That's the next place possible to get to. Okay, so right now we're getting ourselves a risk reduction. Now at this moment, do I consider this? Well, yeah. I mean, I think we've sort of built a pretty decent narrative. We've gotten a little bit of action out of both sides. We get to see that the bears were unable to really push those bulls out of the market and make an impact the way they needed to. So I think there's some hope for the bulls. Not bulls hoping, but hope for the bulls, in that if the bulls come in and they pick this up, we're getting some trapped orders. You see that? The bulls come in and pick this up, and it's going to be like, what are the bears going to do? Push it down? They failed at that already. They had everything they could have ever needed and suck. So let's keep our eyes on this. Now, I know this is like a lot of events. You just have to get used to this kind of timing. Timing is not in 5 minutes. It's you work through the events, you metabolize them as they happen, and then you wait for the moment to take advantage of the narrative we picked up on. So we got the narrative. I've gotten enthusiastic. I think I see what's going on here. I think I see that the bulls have messed up. I think the bears are going to pay the price for not successfully attacking the stress test. Now I'm waiting for the moment, the right opportunity to show up, that I can get in and try to take advantage of what's going on here. So we track the narrative. We see it. We know what these things mean. They have meaning. They're not just new lows and series after a previous low or something, or it's not just volume, it's people. So now that we kind of got that down, now what we're looking for is the risk reduction. I want to cover this again right now. You look for the wide sample, which is what we're getting now, and then you usually get a quick sample. Not always. If most of the time you get the quick sample. Usually this has to do with the enthusiasm of the person trying to take it if they're successful. If they're in the best situation ever and they're right and they're able to grab onto that. I actually think that those positions get the double. And my thinking there is that if you know something's going to move up, you might as well get as much as you can. If you don't know it's going to move up, you're a little more skeptical, then you want to just get in and try and front run the demand. So you see a little bit more demand. I know it's a little backwards, but it depends on how sure you are. If you're super sure, grab everything. Let it move down lower. Fill till the end of the day. Fill. You know it's going to go up, so just keep going. But if you don't know, then you need to create a little demand because you want a little buffer there just in case you're wrong. Maybe you want it to move up so you can grab some insurance policies with minimal expenses. So that's what we're looking at here. And I think that these bulls haven't really established a high level of, we know for sure this is moving up. We've seen a high level of do nothing. But I think we clarified the narrative here. We've clarified what the bears could do. Now, at this point, we have a bifurcation in the randomness. Bifurcations where you get random numbers and then suddenly you get two random. So you start to get a coalescence of two different stories. And that's where we're at, this juncture. And this juncture is this idea that bears perhaps are just screwing with us. And they're going to come in and just a big old chunk of capital is going to hit the market. Maybe they know that the Fed is going to speak. Maybe they're so excited about some news event they have a leg up on, they just don't even care. And they're just filling positions. And the bulls are saying, oh, I don't think that's what's going on here, but perhaps that's what's happening. So you must remember that bears can push just like bulls. The only reason that the bears don't shove this down is because that costs money. And it's much better to put in little amounts of money and get lots out, not put in lots of money and get lots out. That's less money. It's less money to, you put $10 in to get $10 is less money than putting $1 in to get $10. It's less money. So they don't want to push because it's expensive in the thing that matters, risk, pain. You have to report to your investors. The investors are going to say to you, what's your return? If you put in extra capital, you had to put $10 in to get $10 out. You're like, I made 100%. If you had to put $1 in, oh my goodness, that's so much. So we want better numbers. These guys fight over this crap. So they don't want to push at all. So I think the lack of kind of clarity here, remember we were talking, is bringing in this one tap pop kind of mentality. I just want to be clear about that. We don't have a lot of clarity in terms of these data points to say the bulls for sure want to play. If they for sure want to play, then the bulls might try and fill a little bit more of a position here and take advantage of the weakness we saw the bears failing to pop this out. That's what we're looking at. So we could see this pop up. You can see a little move up. Here's our lurch. Here's our trapped orders. When it gets real close to finishing up, it chops it off and gives you a nice bar to help you eyeball where that's at. And intra-bar, this could stop. So that's what we're looking at. You can see it in real time what's going on here. These bulls are getting a risk reduction right here. Let me tell you one feature of risk reductions you need to be aware of as you see them and use them. The cost of reducing, just focus for a second. I'm about to say something that you need to remember. The cost of reducing your risk is exposing your stop. The lower your risk, the higher ability the market has to see how to stop you out. If you have very high risk, it's difficult to tell where it is to see you stop out. Unless, of course, you have a small trading account and you're pathetic. In which case, your margin call, so it doesn't really matter what you do. Your margin call is simply always the target drawn on all the professionals' charts. The cost of reducing your risk is exposing your stop or your risk tolerance. So risk reduction is great in the right situations, but you have to remember that getting this reduced risk is once it's all finished up. Oh, look, we're getting it to push down a little bit here. Is that once it's all finished up and this stops, not before, we're going to say, okay, that's where now we kind of know where that their stops are. They're going to be right below. They don't really tolerate a whole lot. The whole point is just to, if you could get a position here and it popped up, 5 points, then you have a bunch of contracts here, and then you can work with that. Maybe every time it dips, you just keep filling and filling and filling and filling and filling. And it's sort of something you get into and you work on, where with liquidity, the way I think about that is if you sold here, you pop in with 100 contracts short, and you ride it until it's a little bit longer term concept. You ride it till you have opportunity. Maybe you put something in for some other reason, but the risk reduction has a little bit more to do with get in a little bit smaller and build your way up. So you're easier to stop out and people can see it. So that's important. So when this gets done, so there we go. Did you see that? Finished up. We know the stops will be likely just below, or honestly, I think below the current lowest value. So if the market were to go, okay, let's dive down and do something like this, what would be happening is these stops would be getting fed here. Why is this important? Because it feeds into the fundamental philosophy of liquidity. If you're long, okay, let me tell you what liquidity is. Liquidity is the concealing of open interest delta. If I buy 1,000 contracts and I just do it outright, suddenly the market sees open interest popping up, somebody writing a bunch of contracts and the market's looking to fill them. That pop in open interest is very damaging to institutions. They don't want you to see the shift in open interest. So the best way to do that is let the market sort of collect on the other side and then match them. So either you could, like a seller comes in and you buy the other side, you take the other side. Nobody sees that. It's just a bunch of people trading and they think, oh, the market's dealing with it. It's like, well, sort of. Or you take a buyer and you stop him out and you take those from him. And maybe you take out 2 or 3 buyers and you take their contracts. You concealed your open interest in either way. It's about hiding the open interest shifts, because open interest shifts lead to price changes in the near future. And so if you're trying to buy into the market and the market sees it, everyone sees it, price will shoot up and you won't be able to fill anymore. You hide and hide and hide until you can't hide anymore because you consumed everything. Everyone got stopped out to you. All the sellers traded to you. And then you start filling again and the market has to move because you ate up all the people who could possibly hide your open interest. So your open interest starts to get exposed and that results in price movement. So that's where we are right now. Here's our decay retest. It's in place, new highs, everything's looking good. It is here. This is the moment. We have our moment. This is it. So this is where I go, get my screenshot, and I come over to the Discord and I say, here's the bull's moment. Pick up a risk. That's not it. Done. This is it. This is the spot. Now, why do I think this is going to work? I think this is going to work, and it's going to work just fine because we established what was our objective this morning was to just find some bears. We found them. Then we needed to build the confidence in bears. Remember, it's about trigger those bears emotionally. How do we do that? I wasn't quite sure, but it became clear. The bears pushed down and failed. The bulls played possum. Oh, you got us. Oh my goodness, you got us so bad. And the bears screwed it up. And we saw that because tension didn't curl down when we dipped. They failed to control the thing that they could have done. That's why I think that this is a better spot. Now, it doesn't mean shut off your brain and move forward. It just doesn't mean that. You have to be careful that you never do that. The point is that right now, I think the bears made a mistake here and here, and that's creating opportunity for the bulls to try and pick this up higher. How high this goes or doesn't go is going to have to do with the next couple of events, the things that come in, up next. If the bears decide that they are going to just slam this because whatever. Fine. The point is we're able to see this. Now, there's the next thing that can happen, and this is how this develops. So we need to start building this out really quick because I've been focusing on just like, I think this is a good spot. And since this is coming down, I need to switch gears really quick here. As we move down, this is the thing that you have to pay attention to. Remember the open interest concealment problem. So if I take this and I put it right under here and I say, okay, here's where probably open interest is, we're starting to get a bottoming type theory thing. And the bottoming type theory is that people like to reduce the amount of money on the table without reducing the risk, in their opinion. So one of the things that happens is people see the market sort of bottom out and move up, and they say, okay, I think this is going to move up. And so then they try and pick up some position. You see it pop up. We saw it kind of pop up there. And then what they'll do is they buy here, and they think they don't have to share a stop loss with the controlling party, which is most likely down below the lows. So they say, well, this is less money and less risk. And so markets love to come down. So here's what I think is going on right now. And this is the moment where I'm actually getting a little bit motivated. We have to pay attention. I know I'm talking really fast, but it's going to happen right here. You take your decay retest, you find your stop loss. It comes down, eats up those stop losses. We could even look for a little bit of curl here. We already established the point that these bears have no spine. So I think this is trying to look for opportunity for the bulls instead of the bears. It dips down, it tags these stops. Those stops get hit. These guys transfer their contracts. This is no longer a risk reduction. This is now liquidity. The market generated the opportunity for an institutional player to come in and pick up positions without spiking open interest delta. Okay, so 53, we are down at 53. We pop down, you can see I'm going to pull over to the ES because this is the thing that I like the most. There it is, right there. Do you see that? So we popped down, we tagged. So a lot of people will scoot their stop up thinking that they're safe between the low of the day and the lowest pivot after it's lurched forward. But the truth is that right in this area, you really have a high chance of getting stopped out. And so it ends up being the amount of money you save actually means you lose more money because your probability of losing that smaller amount of money is so much higher, you're probably going to lose it. But if we can tag that here, quite get down as low as maybe I was thinking there, but we tag that. There's the liquidity. Look at the sell orders. They're coming in. This is perfect. So now we're not dealing in a risk reduction here. We're looking at liquidity. So that's bullish liquidity. Okay. So we came down. Do you understand how that worked? The buyers filled in their risk reduction, came down, hit their stops, and we have trapped orders coming in. And that tells you right here that they're taking the orders from the people and they can hand them over to an institution now who can consume them as liquidity. I distinguish between these two because the risk reduction is not about reducing your open interest delta. It's about reducing your risk. Liquidity is about hiding your delta, which is the way institutions trade. They want to hop in without that delta popping. That's the reason the dark pools exist. They don't want you to see the open interest delta, usually for 24 hours. And that means by the time you see it, it's over. They're done. So that's where we're at right now. You see, so we pop down here. We got that. Now we're watching these orders fill. This, I think, we're looking real good. Now, do I know for sure that this is going to pop up right here? Of course I don't know for sure. Do I even want to do it? I get a pitted stomach. I mean, I think that there's a lot of bearish things that you could say. Maybe you step back and you say, your narrative's all wrong. I think you're all wrong. Bears are here, bears are here, bears are here. And they've been able to pump the market down and they've trapped these bulls in upside down. And I might say to you, you're right. I absolutely think you're right. Why would I be looking at this as a bull? Because inherently I'm a bull. I track things from the perspective of the bullish market. So if you don't like that, too bad. I just track the one side. You need to go somewhere else. I'm just looking at where bulls have good opportunity and where they don't. I look at this in this way always, whether I'm buy or sell. I'm always judging things from the buy side. I just prefer it. Whenever I listen to bears talk about their ideas, I just think their brains are scrambled and it's just nuts. It's just like, I don't know. It's not it just doesn't work with me. It's not crazy. It just doesn't fit me. I have a particular way of thinking and stuff that works for me. If it works for you, great. Then we can work together. So I think that's what just happened here. You see that? So now you have to look, they're actually, a little tick down there, a little bit here. So we're looking at this, trying to figure out exactly where this is. And I think this is the moment. Everybody hopped in, and this is the opportunity. Right, there really is nothing more the bulls could ask for at this. There's just nothing. There's just nothing more you could really want out of the market. Maybe it pushes down a little bit further, I suppose, but I bet just moving right to there got most of the people being conservative. So this is it. Get long. That's it. Get in. If it's going to go, this is the spot right here. If you get under 57, you could, I don't want to tell you what to do. Don't trade based on what it is. Do the things that you think. I'm just trying to fill in the narrative and give you the points that matter. I think this is a good spot based on what I've been seeing. The bears could come in and swamp this. Totally possible. So I can't tell you what to do because I don't actually know what's going to happen. And in that regard, I can't say what you should do. I can't advise anybody on anything. But this looks pretty great to me. He's saying, somebody's asked me about the McClellan oscillator. And he said, somebody asked me about that, so I did respond. I apologize. Okay, so we're at 34.55. I think this is here. So how should this play out? If I'm correct about this and we have established the narrative, we have an opportunity for the bulls, how should this play out? Well, at some point in somewhat near future, I think the prices should make their way up. And I think with the way that this is set up, that this would look like a nice slow squeeze that just is a pain in the butt. That's what I think this looks like. So we could most likely be using, here we go, this. Let me pull it up. Let me switch so you guys can see. Is that right? There it is. Okay, so I could use the tick, money tick compared to the ES. What you're looking for is I want to see the bulls come in and they move it in such a way that the tick pushes up. We get a new high on the tick. I'd love 8 or 9 or 100 or 1,000, and then we see something like the tick pushes up. We get like, let's say 900, and that correlates to maybe a spot right here. And then price continues above that level and goes up, while the tick never goes above that level again. And that's, to me, that's inverted. That's the way you build and sustain and create squeezes, if it's going to happen. So that's what I would anticipate coming up next on this. Now, we need to consider the downside because you can't get too hung up on a bunch of stuff, especially at the get-go, a lot of these things. If we decided to move this down, what I think would happen is that we established narrative, we created drama, we had opportunity, I got enthusiastic, it's really getting interesting, things are great. If the bears came in and said, well, you weren't able to turn us in and upside down, and they just shoved this down, look out. I really wouldn't tolerate, be picky at this juncture, because we do have some extra risk coming in, and the fact that we don't yet have any bears actually upside down. So if these bulls can't make that happen and it moves down, I think that you need to be picky, because that will end up being that much larger players are going to execute right here. These are the people who are patient, who waited for real conflict, who waited for trouble, who waited for everything to slowly line up painstakingly, the way that we've done, and then waiting for just the right time for everything to work out, and they're probably sitting around in here. That there's a good chance that if this gets pushed down and moves, I think that look out, because that's going to really motivate bears to do what bears do best: pile. They say dog pile, but I believe in a bear pile. They'll pile. That's what bears do. They bear pile. At this point right here, this didn't pop up. So I don't see yet the institutions having actually hit. So they have yet to hit. I need to see a pop, because if you're an institution who really does fill market wide and you're filling on a concept and an idea that's going to pay out, you don't just buy a couple contracts. You have to fill market wide, and that ends up impacting two things. Tension starts to accelerate in the direction that you're trading. If you're that big, if you got enough buddies. Other thing is price must pop in your favor. If you're an institution big enough to curl tension, you can bet your butt price is going to move up. So I'm not anticipating the bears come in and hit this. I think we built the narrative, and that's what I look for. The narrative came in, the bears screwed it up. They failed the stress test. The bulls have their opportunity here. We're getting a little bit of trouble. I'm going to keep my eye on the tick, and I want to see this pop up. So what do? You pull up a tick chart, you take a look at that, and when you see it, snap. Or you could just watch this here. You'll be sitting here watching, it says 34, 55, 55, 55. Then the next one says 34, 56, 75. And you're like, wait, what happened? Where are all the ticks in the middle? And that's the sweep up. You see that snap up, and then it moves out of that in the direction. If we don't get that, then what's happening is that you are seeing the liquidity. What we're measuring here is not the institution consuming liquidity. Okay, that's important. They have done a great job at hiding that. What we're measuring is the liquidity or the volume being created and handed to them. I can't see or tell if they consume it in real time. I cannot see that. But I can see the preparation. It's like I can look in the kitchen. I don't know if you ate the food, but I definitely know they made a turkey and took it into the kitchen or into the dining room. I don't know if you ate it. I don't. But I can see the turkey. So that's what this is. We're looking here to measure if it's been created and if it's being served. We don't know if they're going to consume it or not. They're just too good at hiding that. So I don't know if they're consuming it. And I don't see a pop up yet. I don't see this, this would need to do something, like this. And the second thing, remember, is can you accomplish anything? Did you accomplish anything? Did your pop-up do any favorable thing that you needed done? So again, this is the moment. This is the moment. This is their moment. And what does this look like to you? I can tell you the amount to which I am enthusiastic will equal the amount to which it breaks out the bottom. My enthusiasm is a derivative of the setup and the opportunity that's available here. If the bulls don't take the opportunities, there's nothing I can do about that. I can just see the fact that it was built and worked, and they've got all they need to make this happen. If they don't pick it up, they did nothing. And I think it'll really motivate the bears because of the level of conflict that would create. And we have the patient bulls coming in and just ready to make a mess of these bears because of their inability to really do much of a good job liquidating these bulls. And then the bulls do nothing. And so it's like, this is getting hot. So the amount to which I'm like, this is it, is equal to the amount to which it out the lows, because that's how much a lot of people are going to be in the market doing stuff. It's going to be hunting for pain tolerances. And bears are not famous for their slow moving markets towards pain tolerance. They're popular because they bear pile right to the stops. They love to fall down to wherever they can go. It's just nuts. Big orgy of selling. It's insane. So that's where we are. Either way can happen. I think the bulls have a good opportunity. I think this built narrative wise, to get this up, but I'm seeing, where are the bulls? Where are the bulls? What is going on here? What are these bulls doing? I mean, look at this. We got this all the way. We're at negative 14%. What was it? Negative 26% we get down to for the next multi-day decay retest. Is that what's going to happen? We're working, is that 26? Let's check it. Okay, 24. The only reason I'm checking these much further back is simply because this whole move up had to do with all that stuff. So that's why I think that we can look a little bit further back. Usually I don't look more than 2 days back. I'm going over this right now because this is a crucial moment in the market, and after all this excitement and seeing what's going on, you need to understand how this whole situation works, how it's built and what it does, because this is the toughest stuff. There's lots of money on the table. You're like, it could go way up, it could go way down. It's really, really hard. You could get caught up in the moment and you could get really hurt if you're not paying attention. You need to be able to pick out the spots where there's actual opportunity to reduce your risk, actually, and increase your opportunities, and to know what it means if your trade works or doesn't. It's really important that you understand that, because if your trade doesn't work, it'll frustrate you for a while if you don't understand why it didn't work. What's the counter? What was the other side doing? Why was it such a pain? What's all that about? You need to resolve those things. So I'm going over this because I think it's hard, complicated, and difficult, and you need to be able to understand what's going on here so you can understand why things happen the way they happen. The opportunities that show up, the one that I think is sitting right here, the bulls could easily just take advantage of right now. There's no reason for them not to be hitting, other than maybe picking up more orders for a little bit. This is not some packaged entry system. The way this all looks is strictly unique to today. This is today's market. This will never happen again. We will never see this set up like this, in this configuration, with this stuff and everything the way it will. Never, ever see this again. But what we will see again is the story they tell. In fact, that's pretty common. You get a little like, how did this market work? Usually markets build the same narrative every day in a trend. It's like, oh, do the same thing over and over and over. And then once it stops working, that's how it works. That's how the last one worked. It was the same story over and over and over, even though it looked different. So this is going to be unique. We'll never see this again. There's nothing you can take away from this and be like, okay, here's how it all went. You had to be, understanding what was going on here had to do with understanding what was going on. So I see the opportunity here. The way I like to take risk is I don't really like to catch the lows and the highs. I like to force the institutions to pay me. I love that. I love to say, I see what you guys are doing and I see you. And then I get in and then they have to work and make me money. And I really have yet to really see much going on here. This is just sort of hanging out, and it continues to inch its way down, which is not amazing. But hey, remember what we were saying earlier. If you got a good thing going, fill what you can, but it doesn't mean break your position. That's not what, you don't let your position get underwater and give the other side advantage over you and stuff. That's not the way, that's what confidence looks like. So I haven't actually seen this pop up yet, in my opinion. I've been trying to watch, but I haven't seen that. So I'm still waiting to see those bulls do anything. And if you remember, there was do nothing, and do nothing. So it's like, bulls, okay, I see that you were waiting for things to set up and develop for you, but now that they have, are you going to continue to do nothing? Is this just bulls sit on your hands day? Is that what this is? Is it bulls just do nothing day? Did somebody make a phone call? Nobody do anything today, guys. It's bulls do nothing day. And maybe that's credence to what you were saying. Somebody was saying in the Discord earlier, it was like, well, this is the bear's chance. And I'm like, what makes markets aren't fair? There's no chances. There's no reason anything has to do anything. It's just a struggle over money. So I'm seeing these bulls doing nothing. This I don't like. I don't like this. Not because I don't have a position open. I want to say I'm not in anything. I'm walking over this narrative because these are difficult, and really my objective is that at the end of the day, you understand what happened today. You see how I walk through a difficult market. I knew it was going to be difficult because, well, we just blew off tension and shot down. We had a pretty aggressive move. A lot of people were I knew it was going to be difficult. There's a lot of things going on here. So walking through these so you can understand how to think properly to navigate these things with the minimal amount of risk and the most amount of profits, and to be able to understand what's happening gives you the best chance to really do well. So hopefully you guys can see, sorry, my lips are like super dry today. I'm trying to keep up. Hopefully you guys can see how that, we're sitting here moving down and I'm like, where are the bulls, right? Like, where are you guys? What are you doing? If you bought here and your stop was here, man, do you hate looking at this? But it's not like, you're using the decay retest and the stops are exposed. That's part of it. And what I mean by that really is if you have a decay retest like here and it shoots up and your stops are here, price can come tag your stops and we know you're out, and I don't need to see tension curl down to know that you got stopped. Usually what I look for is a snap in price. You see it go, ooh, and then when it gets to the stops, it goes pop. And it just goes, and it usually makes a little V right after it snaps it. And that's how you know those stops got hit, because you anticipated them and then you saw the evidence that they were there. We don't ever really get to see positioning in real time. We just infer it based on the things made. Okay, here we go. There we go. We're getting, it didn't move up a bunch. It's about to here. I'd like to see a little bit more up. Okay, we get the buy orders. Let's see if we can again let's hope for that a little bit here, but we're getting a little complicated. You remember earlier I was like, this seems a little lame, like just a price move. This seems a little bit better. We had some drama this time around. Okay, so we're getting a little bit of pop up. Let's see if we can keep this going. I want to see the buy orders get used to stuff the bids, see if we can get that to sweep up. I mean, at this point, it's game time, bulls. It's game time. Right? That's what it is. It's game time. You've been tinkering around, screwing off, whatever. We got all the parts and pieces. We got somebody to pay. We got the scenario. We got the open interest. We got the setup. We screwed around with the market. We had some stops we could pressure and see if we could pick up some open interest liquidity off of. I don't have much more tolerance. If the bulls are going to continue to do nothing, pop it up and then it just grinds back down. The heck? So that's where we are. I still think this is an opportunity. I think it's just taking its sweet time. Bulls are often slow and they move slow and they're patient and they wait all day for the opportunities to develop and stuff like that. The bears are a little less so that way. The bears are like, where's the opportunity? Give it to me now. I got cocaine in my veins and it's only gonna last an hour. So we got to fill as many orders as we can. Otherwise I'm gonna come down this and realize I'm making bad life decisions. And that's kind of how they work. And so bulls don't work like that. So we see this move up. We got to keep going. It's game time here. It's game time. We got all the things. We got everything set up. We got it all lined up. You can see tensions just like on this move here. I think if the bulls are going to come in, we get this to move. Remember, we need to accomplish something. And in my opinion, accomplishing something is this: getting over these positions, because these are the troublemakers who we've been battling it out with. If they can't, until that they really accomplish that, I'm still sitting here going, come on, guys, come on. If you don't get any work done, it's like, what are you doing? And in doing that, if we can get this up over these positions, which I'm still anticipating, it's just taking its time. Tension should slow down a little bit, because at this point, really there's two objectives that you get as you turn a trend. Okay, it's listening time. Two objectives. The first objective, naturally, if in this situation, what do the bulls want now? Well, the bulls aren't necessarily worried about this. What the bulls want is as much bang for their buck. And what that means is, how far up can we get this at the expense of these losers? And that's a hard question. How do you optimize your profits? And sometimes optimization, like yesterday, meant just shove. Sometimes it means, be careful not to move too quickly or you'll spook them. Sometimes it means all sorts of things. It really depends on the day. So they're not so much worried. So the first thing you see tension slow down as they run somebody underwater, right? That's your first goal. Optimize your entry. Get the most money you can. Drive this up. So that's what the bulls are doing right now, and they're being a pain about it. But it looks like we're getting going here. We just need to get up, 34.72. We get up above that. See if we can get up higher than that. So that's where we're sitting. We could get here. So we had plenty of signal. If you try to take advantage of this with me, you're looking at 34.55, 34.50, 34.50s. 34.50s looks good. Okay, so the objective here is to get this up here first. The next objective, okay, so first is profits. Profits are something in the future. How do we optimize making sure that we can keep this going higher? Okay, second one is advantage. It's a V. Advantage. What is advantage? Well, advantage means, well, can we get tension up a little closer so that if we gapped up tomorrow, tension could go higher? You want to get things set up in such a way that you can control the probabilities tomorrow. That's your second goal. So first you're like optimize, then you're like, okay, let's see, how can we get this as close as we can? If we, like right now, the bulls, it's taken most of the day. We only have 2 hours left for them to just get the gosh dang problems worked out and get a scenario where they could buy into it with liquidity, get the conflict, know there's enough bears here to pay. We got all that worked out. So then as this slows down, then once, you start to see this work out, then the bulls start going, oh, okay, well, let's focus on, how far up could we get this? Or another way to do it is, how can we screw over the other side so that it gives us the best chance tomorrow? And I think one way to do it, 2 hours seems like a long time, but one way to do it is to take these guys, and when you run it up, don't run it up high enough that they liquidate, right? So into the close, market closed, they're still in a position, they never covered. And then the next day you can gap it up. And then as they cover in the open, you get this nice acceleration there. So then you just you don't have to gap it up much, but because they're underwater, seeing a gap up, they cover and things kind of move up and you get the sort of gap and go idea. You see where that's coming from? So the idea is, how do you get that advantage? But that's only after you optimize your profits. And you cannot optimize profits until you're in a winning position that has a loser. So that's not a consideration until we're here. But that's what the bulls, I think right now, and I think that we see bulls, they're coming in, we're seeing their impact, and you can see that tension's starting to react a little bit. I just want to see tension slow. I don't want to see it curl up yet. Nice slow move before the bears realize, and that's how we're going to do this. Okay, so that's what we're looking at. Can we make it happen? Well, I think we got all the parts and pieces, so that's where we're at. Looking at this, just look at this. One of the things you can do is, like I've done here, you can mark out all the spots, right? So we've got a bear position here. We have an upside down bull position here. We have the bear position here, which I think this was the one that probed the market. Then we have some stops that are potentially down here, but we moved down pretty, through that. So I'm just not going to focus on those anymore. I think a move down through the lows is going to be looking to liquidate the bulls, not give them a position. So then what we can do is then I'm going to mark out right here. They're about the same. So I'm going to do this one. We'll just, okay, green. Okay, so we're getting our layout here. You can see. Now, still there's some troubles here. It's pretty easy to know. This is a winner. This is a winner. This is a loser. This is a loser. This is a winner. That's not a winning position for the bulls quite yet. So they need to do more. We can't see this. They got 2 hours to make something happen. And if nothing happens, I think the best option for you to do is make a critical decision. Do you think that this is ready to pop yet? In terms of like concept, tension, and really when I look at, is it going to pop or not? I ask myself, is tension, are the market participants sitting here thinking about driving tension back over zero? And no, they're not. They're not. The bulls, even though they've got all this opportunity, they're still not looking at that. So this isn't something that I'm sitting here going, I think I'm going to hold on to this overnight. No. This is, we've got some opportunity. We can get in front of institution on a very difficult trading day that can create some great profits. If we can get these freaking bulls to get off their hands and participate, that's what we're looking at. We built the conflict, we got the setup, that's where we're at. If the bulls just cannot, I mean, look at this, it's just like, it's not amazing, guys. It's not amazing. That's not amazing, is it? Does it look amazing to you? It doesn't look amazing to me. It looks like these bulls are comparison. Okay, let's just compare to a time when we saw bulls come in and participate. Let's see. Let's look a little more active. Okay, so let's just real quick take a look. Here's bulls. So these ones turned it up. It came down. This was teeth. So the real bullish position is you find the spot and then you wait for it to go. So this would have been the spot here or here, and I consider this some sort of bullish action. You know, something like that. They had some struggles, came back, pressured them, but then it took off. I think we're at like something like this here. That's what I think. Bullish position, it did inch its way along. This isn't really the same situation. You know, I'm trying to remember the last time we saw this type of market where we saw spill into some tomfoolery, into this kind of stuff. I mean, my expectation is to see just this. Like, I really don't expect this at all. Not even a little. My expectation is like this. We see this kind of come up, maybe a couple bars, and then it goes like that, maybe some trouble, something along those lines. Something that keeps these guys from dumping their shorts. So yeah, I think we finally got decay to turn. So we got here's our retest, then it dipped down. It got down to 14, I think, but we got our retest, and you could, I don't know which one you call this, the double one or this one. I think this is the spot to look at. So one I marked and tracked was right through here. I think there was good reason to be enthusiastic about all this. So that's where we are. This is kind of moving up, and this is kind of good. You know, I want to see it kind of move up, and then we see decay move along. That'll show the energy coming into the market. We should start to see velocity start to lean up towards those bears again. That's what I want to see. Tension cooling off. Maybe bulls just do nothing. We're still in that zone. Like, in my opinion, this trade has this idea. It really is this idea has yet to do anything. You know, it's pushed up to 34.57, and I think that is. There were some moments there where we saw a sweep, and I think that was institutions doing a little filling there. We're not really seeing much of an impact here when it comes to tension. You know, the goal here is continuous slowdown, not a little blip. What is that, an order? I don't care about an order. I want to see like a change in behavior. I want to see this slow down like that. Otherwise, it's just a moment. I don't care about moments. I want a change in behavior. So we've just, you know, hanging out still right about the 55. I feel like I continually see 34, 55-ish, you know, right in there. And so I am gonna mark that on this chart. Mark it. Let's say bulls. Okay, so that's where that's going to be sitting. Right there. I think that there's legitimate bulls sitting right here. Now we just wait. We wait for the payout. That's all we do is just wait. Just waiting. I think the narrative's lined up. You guys have walked. If you've been here the whole time, you know exactly what I'm thinking. You know exactly how my brain works. Maybe you don't. Maybe I'm just alien to you, but you should have an idea of how I think. And I think that the bears had the opportunity. If if the bears do push this down, that's trouble, and expect something dirty from the bears to happen. I think that this is, it has little parts and pieces here to work out. If it doesn't work out over the next little bit here, over the next little while, I wouldn't tolerate much. Don't go running your risk on this. My reason for saying that is simple. Does tension look like it's about to cross over zero? No, it's not. So you need to see action from the bulls in order to believe that this is going to happen. Otherwise, right now, all the bears really have to do is wait, because tension's going to keep doing this. It's going to close down here. We're going to get that, 45%. They're going to have a bunch of advantage over the market, and the bulls will have spun their tires, and the bears could just do nothing and wait. If the bulls don't show up, that's all they have to do. They don't need to. They have the advantage already. So if the bulls can make this happen, the big turn, make this turn up the way I think it could, then the bulls will be able to make some things happen. Just looking at this and thinking about going into tomorrow, and if I just drew this like this and say, even with a gap up and we moved, we got a while. Even at this kind of thing, if we had a nice, like this one's like that, we still have, the bears are going to have control over this for a while. So at this point, that's what the bulls are looking at. They're looking out here at these kinds of things. Can we get that up? Maybe we gap up and they're able to, get daily tension right at zero or something like that. But at that moment, remember, these are all opportunities for the bears to try and hit back down. So these bulls have quite a bit of work to do ahead of them. They're going to have to get through these bears, through these bears, through these bears, and through these bears. So there's a bunch of work up there. But I think the thing that gives this validity is pretty straightforward. It's the fact that the bears failed the stress test right here. They failed the stress test. And that's what I'm looking at. That's what I think is important. That narrative lets me think, okay, let's take a look at this, create the liquidity, follows along, and I'm on their side. I don't think that this market has shown me quite yet that the bears have punched the bulls too hard, or the bulls are just unwilling to participate. I think the bulls are just being slow about this. So the fact that we have some no-goes here, I think, was a waiting for the narrative to set up. That's what I think. Maybe that's just me being biased, but that's what I think is going on. So we'll wait and see. We just, until this makes a decisive decision, the only thing I can lean back on is the narrative that I've seen. And I think we saw these guys do this, and that's where I'm at right now. So we just sort of have to sit here and wait for this thing to work out. When it comes to like how much do you risk on something like this, that's really difficult, because the amount of money that you risk on a position, I think, is one of the more difficult decisions, because really here's what it comes down to is, let's say your stop loss distance is essentially equivalent to your confidence. And there is a threshold. If you don't have a wide enough stop loss, you will get stopped out, whether you were right or wrong. But if you have too wide of a stop loss, you're overconfident. You're going to get stopped out just because you're being stupid, and so you're probably going to lose money. So you have to have the optimal amount of confidence, and the optimal amount of confidence is usually not really confident. You just trust the data that's in front of you. Confidence is a very rare commodity that can genuinely be used, but you need to know what's going on. So this comes from understanding. So at some point, it's like, well, where's your stop loss go? Well, if you said to me, well, I know this is headed up, I don't know why you'd have a stop loss that's going to get hit. And if you say, I know this is going to go up real big, you might just use an option and get into a spread. That's fine too. But it's just, I think that the way that you use stop loss and the way you tolerate and cope with risk, and it's an expression of who you are. I think some people don't like stops. Some people like tight stops. Some people are comfortable entering 2 or 3 times to get the best price, and then it goes and they're good there. Some people want a spread. Some people want they only want to trade options. It's just the way you want to deal with risk, I think, is part of the way that you express yourself as an individual. And the reason I think that is because what's comfortable for you is not what's comfortable for me. And that's why it's an expression of you, is because you might do it a way that I'm like, oh, I freaking hate this. This is so stupid. But you're like, no, this feels good to me. Like, it's fine. You have to get kind of familiar with all the different ways of doing it. And it can be hard, because if I said to you, take a wide stop, that might be good for me. I personally like a 15, 20 point stop. I like to stop out long before my stop gets hit. I like to sit here and watch it and say, this isn't working, or this is working. And you probably put it together in your head that I think if this moves down and the bears decide to shove this down, that's probably not working. So that's where I'm at. But I haven't seen, like, it's going to have to do this to sample the bears, so the bears could position a little bit maybe, and then they could push down. Seems like the most likely thing to happen if it's going to happen. But leaning up to do that's going to cause prices to rise, which means it's not a viable option for the bears to consider right now. So while that all leaning up does sample the bears, this room in here is the option, is the little window that those bulls have to inch their way in to disadvantage the bears enough that by the time it does sample the bears, they're underwater. So that's the way that I think, we could see the bears come in and they could still slam it down. That's a thing they can have, but that's a lot of capital. You already showed you couldn't pull it off. So if anything, this right here was the dog whistle, maybe. Although dog whistle politics is sort of like the thing it's like rooted in lying. Maybe like the nod, the nod. The institutions maybe nod to each other, like, you guys didn't do it. And they're like, yeah, we know we didn't do it. They took profit because they failed. Behind the scenes, you think bears are losing, but it's actually the institutions don't lose. That's a silly feature of everyone else, not them. Anyway, so yeah. So we're getting there. And again, the thing I'm looking for right here, maybe I should mark it on this chart. It's a little easier. I don't know. I usually think in the ES terms, partially because that's what I like to trade, but also because it runs 24 hours. So it's more effective to overnight. If I come over and take a look at markets and stuff and I have everything in SPY terms, I have to convert. So I always ES first because that's the one I watch overnight. Okay, so this is still moving. Now I want to take a look at the stat ADI. Now, right here on my computer, I can just do this. Like it's on a laptop that I have sort of on a little thing. I could see it, but I'm going to pull it up onto here so that we can take a look at it really quick. So we have the stat ADI diving outside of this. So let's take a minute here and talk about what this means. As well as what's happening right here. These are sort of tools that are a little bit more difficult to interpret. So I want to talk about them for a second. Okay, so what this means is not that you should buy. That's just not what it means. You could interpret it that way. It could imply that, but what it means is that statistically speaking, based on the price of a bunch of different symbols. So price of the SPY, the Qs, futures, volatility, just a bunch of different things. Sort of create a net. And you say, if we just took this and we said, based on all this stuff, and we reverse engineer the advanced decline, what should it be? This. And so you say to yourself, well, there's only 3,060 stocks. So how do we have negative 5,000? And so what you're basically getting at here is that roughly estimated, based on the prices of the market, statistical advanced decline should be negative 5,000, and that's not possible. How can you have things pricing where that it's not even physically possible to do? So you get this idea that, it's got to continue to push down to sustain these impossible things. Otherwise, what's going to happen is all the market's going to flood the numbers in, and the calculation is going to be that, well, if you want prices in to work the way that they are supposed to work, you need to move things back up. And it typically is that when things blow out the bottom, you get these major pivots, multi-day, multi-month pivots. Now, this is sort of a high pivot. I think this is just a spill off of a... So this is going to be a pivot that matters. I already know this is going to matter. No matter what happens today, this will matter. These can be very tough to trade. They can create a pivot, they can test it, they can run 50, 100 points the other way, and then they work. But the scale of these is like a 100-point stop with like a 700-point take profit. They're just massive. And I don't think it's effective to try and trade them like you would trade other stuff, because they're just when you get to that size, it's like scale doesn't matter and other things matter. So be careful about that. What's important is that this is developing significant pivotal levels. It also means that this cannot continue. Something must change. It has to, because this doesn't work. And I don't know what that is. In my experience, during the this sets up overnight. Almost exclusively. These generate situations for the overnight market trader, not for the intraday. Why? I don't know. We could speculate. All I know is that my experience that this is going to generate the divergences that you're looking for, the opportunities you're looking for. The setups are going to happen mostly overnight. That's just usually what happens. Okay, so that's what this is. This thing right here is telling us that the best fit vectors, this one tells you the delta. So whether they're moving more up or down. So this can be red while this is green, and this is telling you the degree. If its slope is positive or its slope is negative based on the degree it's at. So turning red right here tells you that it turned the best fit vector is actually down. And then what happens in that moment is the predicted trend lines all flip negative because you're anticipating downward movement. So that's this is. Now the market, usually when it switches, there's two kinds. There's this one where that you get a momentary blip, which sets up a low or something like that. All the time we see this. The other one is, because we're still sort of new in this month, only a couple days, I think that this is sort of fighting over the direction of price. So if we get this moving down, then this will turn negative, and then, after a couple of days, it's set in, and you usually stick with one side or the other most of the month after it's already set in. The trend levels are going to be, after this gets all set in, after a couple days, they sort of become little targets and stuff like that. Okay, so this is a generalization of what your eyeballs can already see, but it's quantitative. So you can already tell that price is moving. Yeah? It's okay. No, just leave them like that. That's fine. That's fine. So this is just telling you something your eyeballs can already tell you, that things are moving down. But what's important is that you can see it. You can say, I know that they are because I can see that they are. And then you can also say things like, well, this is dipped down, and if you're looking for a buy position and things are green, that's great for you. Or if you're looking for a buy position, you get just one little bar there and it flips positive. You're like, okay, this could lead to a swing. It kind of gives you the scope thing. It's a whole month. It's aggregate, not the thing you're used to. So it's a little bit, it does a much better job of modeling price than the typical moving average and stuff like that because of the way that I built it. So that's what these two are. This one will tell you this cannot continue, but be careful thinking that it's some sort of magical divergence machine. This is telling you that at this price level, this is insanity. This is clearly insanity. It's pushed way outside. Now, I have seen this go all the way down to like negative 14,000. Just crazy levels. So don't look at divergences as a timing tool. They are not. But they do let you know what's going on. This is insanity. This cannot continue. Things do need to sort of mean revert. That has to happen. It's just getting crazy. This tells you the direction overall for 1 month. These are the trend lines that this algorithm predicted based on a couple of previous months and what it anticipates. That's what these are. So they disappear because it's irritating to have it rescale all the time. So if it's not close to it, it starts getting rid of ones that are distant so that you don't have the chart constantly rescaling. That's why they're appearing and disappearing. It's for visuals. But they're all plotted and they stay there all month, and usually we sit and bounce around them. So that's how those two work. These are two that I check constantly because they're an immediate, you can see the state of the market. You know if it's up or down, you know how crazy this is it in the middle of the range, or you can immediately tell that, and then you can look at tension and you can get an idea of who's pushing, who's controlling, all that kind of stuff in the pot. That's why they're there. Is I use them. You guys are just benefiting from the fact that I wanted them. Okay, so look at this. Look at what happened. What is this? Up and bulls. I mean, think about this. Every minute that they spend here equals more and more and more of this, which is equal to disadvantage. Taking your time right now for the bulls is eating up their ability to gain advantage in the near future. It's chewing it up. Well, it's not chewing it up. It's making it heavier and heavier and heavier and heavier. And so sitting and hanging out here, maybe the bulls are like, let's fill more. And the bears are like, yeah, go for it. You're just giving us more and more and more control over probabilities because it's getting further away from what you can get. That's what's happening. And so they're taking their sweet time, which is a bullish thing. I know bulls are usually pretty slow, but they're losing control of the market. So their enthusiasm, which is lacking, is making tomorrow look worse. So, we move up and maybe tension pops up a little bit and then the bears hit and they just move it down. Maybe it closed like this and they get it down and now we have these bulls underwater or something and they're able to shove it down. Or maybe the bears decide to let the bulls just do everything they can and then close it right here. Ooh, man, if that happened, because then the bulls would be stuck. Legitimate bulls are stuck, and I love legitimate institutions because they're the ones who move markets the best when they're on the wrong side. So then this could just keep going. Tension tomorrow could it just keep on. That's what that would look like to me. So it's like the bulls are taking their sweet time. And is the question, is it because? What's it because? Is it what's the drag here? What's the issue? What are they waiting for? This is starting to feel. What are you waiting for, bulls? What's the deal? Down in the 40s. We're down here in the 40s. I know price. I don't know what it is. I don't know why Thinkorswim can't just update the price charts. You don't need to update everything, but the prices. This is irritating because 34.51, and then you look up here, it's 48. You now think price dropped 3 points, and this is part of one of the reasons. I think that Thinkorswim has a natural tendency to generate FOMO in traders because if prices start moving around, you look at the quoted price or the chart price, and it will be significant. See that 48? That's 48, and you get this inaccurate sense. So anytime you lag data, you give an inaccurate sense about how quickly and the direction of the market, because you just start pricing in a direction and everybody's chasing price, because as soon as your signal shows up, price has already rallied or something. Now you're chasing it instead of executing right when your signal happened or something like that. So that lag is irritating. I just look at this. I look at the shape of this, and then I get used to where the levels are instead of looking at that and going, oh, it's at 48, now it's at 47. I go, okay, I know the lows are around like 45-ish, and the low of the day is at 40 or at 47. That's kind of the way I do it. Because it'll mess with your head if you try and get too picky about that. You get what you pay for. That's what Joe tells me. Okay, so at this point where the bulls are dragging their feet, right here, they never really got up. Remember the work that they needed to accomplish was to get up here over this. That's what they need. That's all they need. once you do that, it's like, okay, you guys were able to accomplish some work. Haven't done that. So while that we have seen some footprints, some evidence that there are institutional people playing here, because I think it's a narrative wise and what's going on makes sense, the Bulls haven't accomplished anything at all, not even a little. That's frustrating. So when it comes down to it, this new story that we've got, which started basically here after we spilled off of this whole thing, we're getting the story. Now, what's important is that this story will spill into tomorrow and the next day and the next day, and it'll help. So we won't have to wait so long to get a terrible picture of what's happening. We'll be able to say, well, this is what's been going on. This is how it played out. And I think this is sort of a rinse, and we're starting to rebuild narrative and see who's what and what's where and things like that. So this is day one of a story in my head, or a narrative, or a saga, whatever you want to call it. This is day one. And we're figuring out what's going on. And what we're seeing here in day one of this saga is the Bulls are dragging their stinking feet. They're taking their time. They got the things. That's what we're getting. And so tomorrow when things happen, I'll say, oh man, Bulls were dragging their feet yesterday.
Okay.
Oh no, I'm not going to play. So that's kind of how I use this. Drag this narrative forward. It's not like I delete it at the end of the day. I'm going to track it each day, and it's going to build. So it'll get better and better and better. This looks like day one stuff to me. Lots of fighting, lots of difficulties, lots of struggles, not a lot of clarity, kind of thing. So that's where I think this is at. So we're drifting down, and you should have the sense right now. You're saying, oh man, 52, I was seeing the 34, 55. So I'm that's where I have this sitting at, just to visualize. You can see we're still not really supporting the situation going on here, and haven't accomplished the work. Need to get it above 74. That's the work that has to get done. So, yeah, that's where we are. They're dragging their feet. I don't think the Bulls have failed yet. They're just dragging their feet. They're dragging their feet. They're taking their time. Okay, that's one downside of the Bulls, but the Bulls tend to do better with structure, meaning they're more predictable, where the Bears tend to do better with not dragging their feet once they all dogpile, but they're hard to predict, so they're sort of difficult. It's like, which one do you want? Do you want predictability, or do you want nice and quick? And I prefer predictability. I want to know what's going on more than I want what's going on to happen quickly. So this is one of the frustrations that goes on. The Bulls dragging their feet. It's not uncommon, but it is happening. This opportunity is pretty good. So that's where we're at. We could look at the volume profile, which I think this is actually kind of interesting. Let me switch this over to here. You see we're able to get some pretty decent low volume nodes. Somewhere, I just grabbed the first one. And so these are going to be spots to pay attention to right here. So is that 40, 35, 40, and obviously 3,500. Okay, so those are the spots to pay attention with the low volume nodes. We had heavy volume. So with respect to the way that volume and tick and price with relationship to the volume profile and some other crafty calculations, this lets you know that overall this move down was a lot. It was heavy. There was a lot of volume here. And so that's what's happening. Sometimes you get it's fast volume. It's not a lot, or it happens fast. Sometimes you just get a move that's just normal and there's no label for that. So here's some heavy. So that's what's going on. We got a heavy push out the low. Am I number 2 now? And we're just waiting for this to happen or not happen. Really, the thing that I would anticipate to end up, let's say the bullish position does end up working quite well. For what it will look like is you see velocity start to sort of have this trajectory, or maybe it starts here, and you sort of just, you can just look at it and you're like, oh, obviously that's leaning, like we had it here. It was just like leaning towards, it was obvious. And then it stopped, and now it's sort of tried it again, and then it stopped. And now if we get it to just lean up, this is the thing I would look, you'll be able to look at it and see. Your eyeballs will tell you. You don't need an indicator to tell you. Then we see decay start to move up, and it'll make its way up. Maybe it does something like this. It's fairly directional. We see it a lot. And tension maybe slow. That's what I would anticipate this whole thing to look like should the bulls be successful in picking up this. And they're just filling and taking their time, because that's what bulls do. If the bears make this down, I anticipate this to just sort of not feel like it does much and just makes its way in that direction, and decay would sort of sit here. Velocity might just go like this, and just nothing. Just a whole lot of nothing.
Daddy?
That's what I anticipate these two to look like. I'm still anticipating the bulls. Still looking at the bulls. I still think that we had the narrative set up through here, the opportunity set up right here, and the scope available for the bulls to take advantage of. I still see that. So, and that's where I'm going to be sitting at until one of these two plays out, because there's just no other option. There's nothing else. Moving down further would just be going from bullish position to, it would be like decay retest it, because there's no way to trap any more in. So it's not like a move down is going to be super advantageous for the bears, but a move up could sample those bears, So, maybe we just wait. Maybe we just sit in a range, and then velocity ends up sampling, and prices just do this, and then we get bears sampled like right there, and then they shove it down, and it's like, oh my gosh, that's ridiculous. Maybe, I don't know. It doesn't change my opinion about what I think is happening right here, but look at this. What is this? You get these little like bumps and stuff in tension. Keep coming in. The last one was here. We could, if you get the O'Weir situation, outside, inside retest. Okay, so one thing I've noticed a lot is that you can't keep your point of control away from price. Like this is, you got to have that come down. If this stays up there and we don't find enough volume right here, then this is going back up there. That's just what always happens. If you don't bring your point of control down, it doesn't mean you're doing well. It does it first, but then it means you're not finding any volume. And it's like, well, if you don't find any volume there, we're not going to stick around. And so it's going to head right back up to it. Usually what happens, you get things to go like this, the volume profile moves down, then it sets up something and runs. Like you have the value area. So you get like the retest, the value area retest, and then it takes up. That's usually what happens when I see this situation, where you have price kind of far away from the point of control. But okay, so it's looking like we're getting something like that, maybe it's like targeting the close a little bit. We see decay moving up a little bit. Again, we need to get over the position that's going to make this whole thing work. We can't sit here and just stare at it. Need to get some work done, bulls. You need to get some work done. We see a little bit of impact. I don't want to see tension curling, though. I don't want to see it curl. I want it to just slow so that the bulls can get that up and optimize profits. They curl it, and the bears are going to spook, and that will limit the upside. And that's going to be trouble, because that limits our ability to move into tomorrow. If you scare out all the workhorses, who's going to do the work? Investors hate working. It's like the worst. They're like, but I gave you money and I'm burdening risk. And they're like, oh, but you got to sweat a little. And they're like, but I gave you money. I quit. And then they leave. They don't want to do work. Okay. So 60, not amazing. I mean, yeah, sure, it looks kind of impressive here, but right, 34.55, and we need to get up over 34.70, about 34.75. So we still got about a 20 points to go to get that work done. So, if you took this, you're watching, you're like, well, I think that's right. This is, you gave me a good time spot. Maybe that. One of the things you need to ask yourself is, how much does good analysis need to pay you? Does it need to pay you 100%? Or does it need to pay you a good amount? I personally trade for 10 points. I really don't care. My analysis has a good track record for me saying, here's where I think it'll go. And then it goes at least 10 points, and it could go further. You guys deal with it. Yeah. What are you doing? This will bite you, Pierce. You can't touch this. This has electricity and it'll bite you. Okay?
Okay.
So, do you need it to go from whatever your position may be up to through 75? Do you need it to go from 75 all the way up to that initial 35, 50 and get yourself 100 points? Is that what you need? I mean, is that what you usually target? My opinion is that predictability is better than price delta. And being able to pick out a 10-pointer or a 20-pointer or something like that is much better than being able to capture 100% of an apparent move. I like to catch the profits I look for more than I like to say I caught all the money, because it's consistent. Are we going to move up and you're going to get all that 20 points? That's for you to decide. This is going to have to do with how much you believe in the narrative more than the signals. Narrative drives trends, not signals. There is no trading signal that generates a trend ever. What generates trends is that institutions pick up on the narrative, they know what's going to happen, and then they start buying signals. The signal didn't work because it was inherently correct. That's wrong. The signal worked because the institutions were looking for reasons to buy. And they picked that up because of the narrative. The signals were coincidentally accurate, not fundamentally accurate. Fundamentally was that the institutions follow the narrative that's profitable. Fundamentally, that's true. Coincidentally, your RSI works. That's coincidental, not fundamental, because your RSI doesn't change the decision-making of the capital that drives price. Your RSI has no power to tell the institutions what to do with price. The institutions alone have the power to say what happens with that capital. And institutions are run by people. People need narrative. That's the only way to drive a trend. There is no replacement. And I'll tell you why it works. I'll write it. Okay, this is the mathematical formula for what works. Are you ready? Equals. There you go. That's why it works. It's hard. Narrative trading, what we just did, is mentally exhausting. I'll probably take a nap after this. It's exhausting. You get excited. You get enthusiastic. Patience doesn't mean you're sitting quiet. It means you're enthusiastic, but maintaining your objectivity. Patience means you're enthusiastic, but maintaining your objectivity. You do not act on your enthusiasm, but you allow the enthusiasm. I get excited. I'm like, oh, what is this? What makes me patient is that I wait for the opportunity, the moment to happen. Even though I get enthusiastic, and I observe that enthusiasm. So it's hard. It will tire you out. It will stress you out. I still white knuckle trades, especially if I think it's going to go more than 10 points. And I'm like, you have to do things like have trust. You have to have things like courage. You have to do things like engage the market. You have to do things like care. You have to try really hard. These are all features that wealthy people hate. They're like, I don't trust anybody. I want to pay for profits. And that's what makes it work, is the fact that it's difficult. Narrative trading is hard. So you get better results, but it also exhausts you. Where signal trading is this idea that someone can hand you something and you can have money squirt out of your ears. And it's easy, and that's why it sucks. That's just why it sucks, because it's easy. It's the easiness that breaks it, not the math, not the rationality. It's that it's easy. Narrative trading is constantly changing. You don't have 2 days that look the same. The story's kind of similar a lot of times, but you'll never see a day set up with them all positioned where they are like this. And the only way to really weed through this story is you look at it. You empathize with the positions. You understand what this means, what all this means, because you don't get to look into the dining room. You just get to see what food went in there. You have no idea if it got consumed or not. So it takes a human being to figure out. That's what makes it hard, and that's also what makes it reliable, because nobody's trying to figure out how to make themselves work harder. They're all like, how can we put AI on this? And it's like, well, once the AI gets working on it, it doesn't work as well, but institutions are doing it, so they must have a way to I don't know, AI and stuff like that. I don't know, but it's difficult, and that's what makes it work. So if it's easy, you're doing it wrong. If you're exhausted, you get into it. Like sometimes I'll just sit and I just watch markets. I don't participate because I'm so into the story. It's like a sport. I see what's happening. I get the fight and I know what it means. And I see the frustrations and woo. And that's enough, you know? This is dramatic. So narrative trading is tough. That's what makes it work. Look at this. We're back to the 55. It's, come on. Bulls go pop. They get us right. What is this? A double top? Are you selling me a double? You saying double top? You go, oh guys, there's a double to top. You need to trade the double top. Make sure you put your stops on the other side. You're not going to tell me that PA nonsense works. Price action sucks. Double tops don't work right here. This is crazy. We have something else going on. This, if anything, is selling you the idea that your stop will be safe a little closer down. If anything, that's what that looks like to me. But I don't know. We just have to wait. The ideas about these bulls, if these bulls are here, if the narrative is real, if this is really happening, it's hard to tell. I think we have indications that there's some institutions popped this up. We keep getting these little notches and tension that are like, oh yeah, there's it's almost like they had some impact there, but not enough, and then it kept going. But again, the issue here that I'm running into is I think the institutions are fighting. It's about, if we just sit here and do this into the close, the bears essentially win, because the bears will have tension all the way down. They don't have to do anything. Flat move into the close is great for bears because that gives them advantage over tension. Not good for bulls. Because if they're trying to get into a position here and then they're giving advantage, so come on, that's not the way to do it. So I'm not certain that I would tolerate a move into the close based on just that idea alone. Like tension's down here. It's like, okay, well, if we get to the 45, it looks like an 8, 45%, that's not quite enough to make me think there's, if we were at 70%, I'd be like, this is a lot of upside force. Let's close this as low as we can so that we can pop it up tomorrow. But 45-ish, 40%-ish is okay. It's okay. It's not amazing. It's not like have to do anything. So there's no tension reason this has to pop up. So moving into the close, letting it close sideways, being bullish through this range, you sit here and you think to yourself, well, that's not good. It's not like it has to pop up. It's not like, closing sideways like this. I would rather wait for a better opportunity to come overnight or something like that. We're getting close. We got an hour left into the close. These bulls just keep dragging their feet. I'm going to say that this is the third time that I've been sort of irritated. We had our spot here, and then it pulled back. Oh, it was right here. Sort of almost, I didn't really think that was it. But then we had a good sweep there, drag their feet, sweep there, now they're dragging their feet. And so this is like the third time I've just kind of been like, you guys, what are you doing? Why are you doing this? You have the ability to do this. What the heck? So this foot dragging is a pain. It's a pain. And this frustration that I feel, I will remember tomorrow. The frustrations that I feel will play into the narrative that I build throughout tomorrow and through the morning and stuff. I'm like, oh, it was so frustrating, or it was this, or it was that, or this is how it was going, and they had this and that, and blah blah blah. It'll matter tomorrow because that's the way you develop narrative. It's about people. So that's where I'm sitting. I'm sitting here just, you guys keep doing this. They didn't accomplish anything because they need to get these. So, I mean, if you grabbed a 10 points off of that when it pushed up, if you got in anywhere in that lower range, hopefully, you could have grabbed a 10-pointer. I like 10-pointers. It's my way. It's because usually you can, if you pick out the correct narrative, a lot of times that institutional money will come in, they create an impulse, and you can take advantage of the impulse, and usually they create at least 10 points. And that's why I go for it. It's just simple, easy, I'm done at the end of the day. That works for me. If you're trying to look for some sort of like a swing trade and stuff, we're going to need this narrative to continue to play out. So we're going to need the bulls to come up over here. Otherwise, the narrative is going to start changing. We're going to see the bears, we start getting down here and closing. The bulls are going to go, I don't want to hold overnight. Like, this is supposed to be a good opportunity. I'm not going to hold this. I'll just get rid of it. And if they all get that idea at the same time, the bears are going to get the same idea. And it's no good when you have both people on the same side. It means that we'll be doing this again tomorrow. Same thing. I'll just cover or hedge and work this out in the morning because obviously it's not ready yet. And that's the crap. So we'll see more of this crap tomorrow. And it could slide down overnight and stuff, but we'll just see more of this crap tomorrow. That's what it'll mean. We'll continue this battle. Nobody wins. It's not over. But probably slide down. And then we go at it again. I still don't believe that, but yeah. If you're taking notes, you should have two columns. It's like the for and the against. And I'm constantly trying to balance these. If I find myself only building one narrative and completely neglecting the other, that makes me uncomfortable because it means you're unprepared. So, for instance, a move back down like this, you won't interpret it correctly if you haven't built any cases for one side or the other and the other. You'll just interpret it as from the one side, and it can get you terribly skewed. You need to understand what a move down to the low means. So if it happens, you can interpret the events in real time. If you haven't thought about it, then when it moves to the lows, at this moment, you'll be trying to work through all the narrative and make sure you have it. And then by the time you figured it out, the story is going to be over, whatever happens. You need to know what it means in real time, not as it happens. So I'm aware of what a move down to the lows will look like. I've been building that reality. Just a second. All right, so nothing happened. So again, just sort of hovering around that 55. There's just not much going on. If you were to sort of just mentally moving average, you can sort of see it's started to move up, and that's good. That's for the bulls to see that we've seen some institutional footprints here ish, little ones, little tiny pops up, but we need less finesse and more movement. Otherwise, this really is uncomfortable for the bulls. I don't like this. I think that hovering around here for we've been sitting here looking at this narrative, going over it, seeing the action, seeing all this stuff for an hour or so, and the bulls have been unable to accomplish anything. We saw the pops. They were unable to get this position underwater. I'm not a big fan. I'm not a big fan of this. I think that the bulls, if they were gonna do the thing that I think we were looking for, would have done it. It would have happened already. So I'm just not like a big fan of this. The way this is looking, I think that a little bit chop here, maybe one test or something coming back up. Now we're on the third time. I don't like it. I mean, it's not doing the things that I want it to do. I want it to move up. I want to see the bulls see their opportunity. I want to see the bulls accomplish something. And then I want to see the bulls start to, play games with the Bears. But at this point, it looks like the Bears are playing games with the bulls because the Bears have these two positions and they're winning, and the bulls are on this like positive negative roller coaster. And it's just like, oh, is it or isn't it? Is it or isn't it? So I feel like this is messing with the bulls' emotions. They get a good opportunity. They have everything they want, the narrative, and it ends up being, as they try to participate, it just turned into a game. What are you guys doing? Like, what the heck? So I don't like that. When I look for things, they work the way I want, and they work in a timely manner. Maybe a little longer than I want, but this is way too long, and this is irritating the crap out of me. I mean, this is ridiculous. So I feel like what's going on here is both sides are just getting emotionally charged. The Bears are saying what I just said to you. We're messing with the bulls. This is going to be great. We're going to blow them out. And the bulls are saying, we got the narrative. Everything's working. We're going to blow them out. That's like, everybody's just getting pissed off. And this is just building. So I'm sort of irritated with this right now. That's the feeling I have. And I observe my emotions in so much as they offer interpretations about things. I'm not gonna. There's no behavior that I take off irritation. It allows me to know that this was irritating. This was difficulty. This was normal. I interpret all these differently. So right now I'm irritated. I think it's very irritating. The bulls are. This is beyond dragging their feet. If you were able to get in and go up here and grab some profits, I think that's great. I like the 10 pointers. I've made that pretty clear. I've always said that. It's just the way that I like to do it because it tends to be the impulses. Run 10 points and then you're done. Do whatever you want. But this is starting to look to me like, we've got this precedent low here. We're going to break that. We hit that and we could be looking at a capitulation. So I'm thoroughly irritated with this right now. And I don't even want to root for the bulls anymore. Like, I'm about to the point where I'm like, I think that everyone's just going to cut it. An hour left, and you want me to deal with this again for an hour into the close on an initial position. It's trailblazing. They're trying to start something. It's like, dump it. Just dump it. It's not working. Nothing's working here. Just dump it. Dump it. I'm starting to think that. Like, just dump it. This is ridiculous. These bulls are pathetic. They're not able to get any work done, and so it's irritating me. I'm thoroughly irritated, and so that's how I feel about this. from here moving forward, I think we got a good narrative. I think the bulls had some good opportunity, and it's looking like, you know, getting down to these lows, the 40s. I think we just actually got a little through there. That the game, and I think this is a game. Though what's happening is we have tinkered with the bulls for so long. Now we're getting down, and well, actually, look at that. Look at, we're getting some curl. And if this is going to motivate a bunch of different people in different ways, but in my opinion, at this point, I got everything I wanted to line up, and the bulls were unable to accomplish any work. And I think that's irritating. I don't want to play with the bulls. I'm not bearish yet. This is starting to make me think like, oh my gosh, is this getting bearish? Because we're starting to get those data points where you have the bulls given really good opportunities and the bulls don't show up to pick it up. That's the way you build trends. You do that. Like we just went over that. Remember, it was you give the bears a gun. And if the bears can't pull the trigger, they failed. And that's what brought it back up. And then we gave the bulls the gun, and the bulls couldn't pull the trigger. And so now we're down. And it's like, really, really, really. So it's like, who's going to win this? And at this point, because of the positioning of the bears, I don't really want to try and stay bullish because the bears have better advantage. They have a better position. The bulls, well, this was the thing I was worried about. Remember, the bulls tried. We had, well, you know, we had sort of three. I'm gonna go with these two because there was two decent. I think the bulls tried and failed, and that's worse than doing nothing, which they had done. So it's so annoying. What are they waiting for? And maybe you guys know that there's something coming up that they see, because I think there should have been a little bit more. Or if they're not waiting for anything, then what we have effectively seen is the bulls, somebody said, hey bulls, here's a couple $100,000 per institution just for this little trade. And the bulls said, nah. And then you have to say, okay, what's worth more to you than money? And that makes you a little worried, right? So you get a good opportunity, and they're not opportunities because of whatever, they're opportunities because they are, and then that doesn't work, and you have to ask a question. Why would you do that? And if we get down, if we see this start to curl down, the thing I'm gonna have to ask is, what on earth are the bulls seeing? And that gets me to say, well, I don't want to participate in this. I don't want to participate in this until it becomes clear, because this is starting to threaten a pretty decent dump into the close. That's what this looks like. It's going to dump because the bulls tried and failed. And I'm like, that was the thing I didn't want because it's annoying. So that's kind of what it looks like to me. The bulls are going to get pressured, which we'll see this. And the bears will get motivated because they were able to create the scenario and get it to work. And then we see the market sort of sweep down. And that's the situation that I'd be like, oh my gosh. It's not what I wanted. John said open interest theft. Maybe, but the problem, okay, so I have been thinking about that. John said the open interest theft. Like we dip it down and we steal the open interest from these guys. They dump it. The reason that I'm sort of veering a little bit away from that is because I think we built all the narrative together through here. We kind of knew what we wanted to do. We got it done. Then we built a narrative. Then we had opportunity. And at this point, after having gone through this type of analysis a ton, at this point, opportunity goes. And we saw, I think this was people trying to take advantage of opportunity. So moving this down here, I don't see that. I see this as failure by the bulls, and it's going to trigger a cascade. And because the bulls who had this wonderful opportunity are going to go, oh crap, and they're going to dump. And I think we still have people hanging out at these other bullish positions, and the bears are going to go, we beat them. I think you know what that means. And I'm not a bear, so I'm going to wait until there's bullishness or something. So I think there was some opportunity if you were able to get in under here. But yeah, I mean, if you're looking for a big old move up, this should frustrate you. It frustrates me. I'm quite irritated right now because the bulls are irritating me. They're like my team. I'm a bull. If I were in a stand, I'd have a big B on my chest and I'd be painted green and I'd be yelling for the bulls. And I'd be really annoyed when they fumble like this and they screw it up because I don't like to hear the Bears cheer. I never like hearing the Bears cheer. It's like the worst sound ever because it's the other team. And that's just how I feel about it. So I'm irritated. And that's when I'm really irritated, that's a sign that the Bears are doing fine. Joe, I think Joe was short today, and I wanted to see the narrative build a little bit better. Now we're getting a picture of what's going on here. So buckle up. Watch. So the thing to watch here is this curve. Remember, you get the curve up. You want to see a curve. You'll also see the pops. You should be able to see the orders trigger, and then you observe over here and you see that tension curls, and then you say, I know who and what that was and where. Joe, quit your yahan. He's over there cheering. I think it's just to spite me. Now, I didn't take any position because I'm going over this, but if I had, I would have gotten in about here, which we were talking about that. And if it moved up here and hit my 10-pointer, I always get out 10. Otherwise, about here, if I had covered when I sort of saw that, I'd probably be looking at like anywhere between -10 and negative probably 4 points. Somewhere in that range is what I would be looking at for an ES trade. That was about where I was like, yep, I'm starting to get irritated. And I click close. I don't put a stop loss. I just hit the close button when I get frustrated, which usually happens before things move. My experience, you get sort of annoyed before you get whatever. I just click close. That's my method. It works for me. Yeah, Adam says, he said, sorry. Had the conflict, the bulls just aren't buying. You're completely right. They just aren't. I can't, we built the narrative correctly. I believe we did this right. We did it right. We tracked it correctly. The bulls had opportunity. The only reason they didn't do anything is because it's bearish. And that's important. This is the thing we can carry into tomorrow. This narrative is going to help us get an idea about what's going on. We got a good sample of this, what's going on here. We saw the Bears come in. They gave us the hook. They failed, and the Bulls came in, and the Bulls struggled, and now we're going to motivate those Bears, and it's giving the Bears advantage. It's making it harder for the Bulls tomorrow to participate. So I hate saying it. I know. I'm just not a bear. I like to buy more than I like to sell, like significantly. Also, I tend to do better when I buy than when I sell. So yeah, I'm going to leave this marked on my chart. I have these marked out so you can kind of see this, where all the positions are and what's happening. We're still waiting for some acceleration here. You'll see tension curl down, and that'll let you know that's where that they were. So if you were bearish and you're looking for a trade to see, you thought this would fail, when tension curls down, that's the spot you're going to be for an intraday. That would be, the bulls got run out. I was hoping for it to curl up, and I said the bears got run out, but today, no. I think this level is going to be probably important for a while. It's going to be something the market, if it does come back, that's going to be something to pay attention to. Very frustrating, but I don't think today was impossible. I do think it was something that you had to stay on top of. You couldn't get lazy about your narrative building, your world building, who's playing, what they're doing. You had to stay on top of it in order to put together what's going on, to see how this is built. I think we could see how this is built. I think we know from but I think about after the first low in here, I think we're pretty accurate, right about here. This was just, coming back off the blow off, maybe some other stuff, but from here forward, I think we got the narrative pretty good. We figured out what was going on, and so we can now understand what's happening here, and that's good, because tomorrow, now we know what built it. Now we know the frustrations. Now we know what's going on, and this is going to give you an insight into the institutions and what they're doing. And you'd be like, oh, well, the Bulls were being a pain yesterday, and the Bears, they feel maybe confident because of certain things, because they're like, oh, we did that yesterday. And that's going to help you. It's really going to help to be able to put all this stuff together and understand what's going on. So when it comes to open interest theft, which John brought up, which is something to consider now, first thing is going to be we need to see them dump, which is tension curling down. I mean, if they don't let go, what are you stealing? So I'm still waiting for tension to give us a curl. After, it pushes down here, we want to see like that, and it goes, all right. Well, it won't. You'll see it. Outside of that, there's nothing for bulls down below. There's no liquidity. There's no samples. And while that sounds like a very bearish statement, it is not. Because that means that the bears will have to do all the work. And that's bad investing. It's not good to have no opportunities for the opponent, because then you have no opponent. So we need to see the bulls get some opportunity to show up, which we saw a little bit of today, or we saw today. And then those bulls need to be competitive, and the bears then can, we can work this out. But if prices just fell from here, we sweep them down. There's decay, there's no samples, velocity can't sample, tension, there's nothing. So I think there is this idea, the bears won, okay, fine, you won, that's great. Now what's coming up tomorrow? Where are you going to get opportunity tomorrow? How are we going to create conflict tomorrow? And that's going to be the trick. And I think today was frustrating, definitely, especially for bulls. Bears, probably not so much. I could see, they got, their position was a little irritating this morning, but then it was good, and then it was just toughened through the bullish ideas, which is hard. You have to have a much wider scope to do that. This is where we're at. Still waiting for that curl down. I think that the bulls failed, and they deserve to pay. You can do better than that. So this is really the thing. At this point, it's just watching that. Or I know. Let's just do this, get this up, and then give us a little something, and then go down. Okay? I don't know. So for me, day's done. It's over for me. There's not much more for me to do here. You're gonna sit and watch, and we're basically gonna see how the Bears are gonna deal with the bulls getting wrecked. That's what I see here. It's just, that's all we're waiting for. It's like, how do you guys want to deal with this? You want to just run it straight down? You want to sample? How you want to do this? How you guys going to do it? That's what they're doing. So there's not much more data to input. It's just, let's liquidate the bulls. What's the best way to do that? Come back tomorrow. We built a good narrative. We can understand that. Tomorrow I'm going to build another one, and hopefully it works better. This was quite frustrating for me. I don't like frustrating days, but it is important on a rinse day where we sort of did what we did. Day one in narrative building is usually pretty tough, because you're fighting over all these things. It's like day 3 or 4 where things get kind of easy, because you get what's going on, you see how things are built, who's doing what, and then it's just like, okay, I see what's happening. So day 1 is tough. So I walked through the whole difficult part. That's laid out. So when I reference this in the future, which I will, you'll go, oh, I know what you're talking about. I get it. Yeah, that was this or that was that. It'll help there. So I'm pretty much done here. I think the Bears are just going to run this, try and liquidate those bulls in the best possible way. Watch for tension to accelerate. And then that's when it happened. It's over. The bulls are done, and we'll be coming back tomorrow, see if the Bears can pump it further. And the goal of the Bears will be to trap some bulls and run them out again. They're going to want to do the same thing tomorrow. And that's that. So I'm going to get off of here, and I'll post a closing read, and I'll mark out all the sections and kind of give a brief so you know you guys can see that. And I'll put it up on the calendar thing, which if you guys aren't using, hopefully you're using. Where'd it go?
You just turn.
I'll show you. So if you come over to the web page, you click the calendar. You don't have to log in. Sometimes I don't do them if there's just nothing to say, and but you can just go over. You get the video if there is one. Joe will do notes. I have some notes. You just click it. It'll take you over to the Twitter where I'm doing, putting them. That way they're time stamped. That's why I did it that way, because that way I do it that way because then it can't go back and lie. Like, you know that's, you can look at the timestamp on Twitter, and Twitter controls the timestamp. I did it that way because it's an inherent credibility. So be like, oh, you made that up later or something. Like, I don't even want to deal with that. So I do them timestamp to Twitter. Joe will do them timestamp to Twitter. Sometimes I'll post them a little late because I don't notice. There's some other analysis on there. That's where you can find all of them bunched up together if you want. And you can look at the closing charts and stuff. So I'll post on there, and at the close, my anticipation here is that, the Bulls screwed it up. We'll do this again tomorrow. Yeah. I hope this is useful, guys. If you have comments or you have opinions, send them to me on Twitter or message on Discord, especially a private message. I like, if you send it, sometimes they get lost there. But send me a message on Twitter or on here if you have an opinion or something and you want me to think about it and talk about it. I'm more than happy to include genuine opinions in the things that I think and stuff like that. So, and I like that kind of discourse. I love chatting about genuine stuff in the market. So feel no fear there. But if I don't respond to you after you telling me about your favorite strawberries, it's because I don't care. All right, I'll see you guys tomorrow.